you're also struggling with the usage of fractals, this video is for you. In this video, I'm gonna go over the fractals in about 3 hours, trying to teach you all the basics you need to know about almost every single tool, including the spread monster, graph settings, the generate buy signals, and many more. So sit back, grab your notes, and enjoy. So right here, that is what you're gonna see when you log in for the first time, and this is
Okay.
the panel where you like see your time frames and all your tickers. And I'm gonna tell
Okay.
you like how you can actually add tickers, right? So
Okay.
if you right click here, click on
Yeah.
add. So here you
Yeah.
can add symbols, right? So let's say I wanna add QQQ. So I can type in QQQ and then just set up the time frame I want to look at. For example, there are like three settings. First is the aggregation. That is like your 60-minute time frame, 30-minute time frame, 15-minute time frame, and 5-minute and 1-minute time frame. So it's like that. This is pretty simple, right? This is available on the linear charts too. Then is the days to load. For example, how many days of data you want to look at. Okay. And then we have the wave. Now, wave, I'm going to explain that when we are actually on the charts. So I'm gonna add wave one daily, right? So it's added right here. You can see it, right?
Yeah.
Perfect. So it's added right here. And let's say you wanna add some like other time frame. For example, I want to add wave 7 60-minute and wave 10 15. So I can do that. So wave 10 15-minute. So 15-minute aggregation I can add, and it's gonna be right there, right? And then if
Awesome.
I also want to look at wave 7 60-minute. So I know it's not going to make sense about the thing about waves, but you can understand with the time frames right now, and I'm going to explain the waves later on. Okay,
Okay.
so I can just click on add. Now there's an option that you can add like bulk time frames, like a lot of time frames. So if I click on bulk right here, you can actually like choose from what time frames you actually want. For example, wave 10 5-minute, wave 25-minute, wave 55-minute, and wave 105-minute. Like there are way too many time frames, right, for the daily too, right?
Yeah.
So you actually use these. For example, you want to just trade QQQ intraday, you can just click on all of these, right? And like the
Okay.
intraday one's still like 30-minute or 60-minute time frame, and just click on add. So it's going to be added right here,
Yeah.
if that makes sense. So here I have my watch list ready for QQQ. We're going to talk about splicing, but not right now. For adding the splicing charts, it's also done from here, but we'll move on to that part later on because it's going to be like a bit more complicated than these charts. Let me just do one setting. It's going to disturb us. Okay. Now I'm going to go with the most basic chart, that is the wave 10 15-minute, and then we
Okay.
can just go on from here, right? So first of all, this is the wave 10 15-minute, you can see right here. And right here downside in this panel right here, you can actually just change the wave number. For example, on the 15-minute time frame only, you want to look at wave 7, you can actually just do that. Okay, you can change the number of waves. And what do I
Okay.
actually mean by waves? So it's a simple concept about the waves. When I increase the wave number, the number of transitions above and below the pivot actually decrease. Okay, for example,
Okay.
here we are using the wave 7, right?
Okay. Yeah.
Right, so if I increase the wave number to 20, you can see the number of transitions decreased, right, above and below the
Okay.
pivot. So that is all like the wave does. Like if you increase the number of waves, you're gonna see like less transition. If you decrease the number of waves, you're gonna see more transition. For example, if I go for the lowest wave number possible, that is wave 1, like the number of transitions increase drastically, right?
Yeah.
So that is like how you do it. And then we have these sliders right here. This one right here on the right hand side is actually just to, if you want to go back and check out price for the pivot or vector for a particular day, you can just go back using this slider right here. Okay, that is all it does.
Okay.
And this one right here, if you want to zoom in to like a particular part, for example, if I'm using way too many days of data, for example, if I move to 30, right, and keep the same wave number, right now you can see, like you can tell that it's cluttered, right, and you cannot understand
Yeah.
much, right? So if you want to zoom in, you can use this slider and move to the right hand side. You can just zoom in like this. Sounds good. So
Okay.
that is just
Yes.
the zoom feature. And this slider right here, that is like where do you want to keep your current price in respect to the fractal chart. So I usually keep around I usually keep a bit of distance. Yeah, this is good. So I keep it somewhere around here so that I can actually see the imprints and the bands clearly, and also the vector price line. So I'm
Okay.
gonna move to the normal time frame, 8, 10, 15 minutes. So now we're gonna go to the basics. So first of all, we have the pivot. You see the word pivot right here,
Yeah.
546.55. So that's your pivot. So pivot is
Okay.
like a neutral line. Okay. So pivot is neither bullish nor bearish. So above
Okay.
the pivot is actually bullish. Okay.
Okay.
And below the pivot is actually bearish.
Okay.
Let's say you are trading, okay, and you see that the price is currently above the pivot, above the vector, okay, so that means the price is overall bullish according to this time frame, okay. It's a
Okay.
simple concept about the vector too, that if the price is above the vector, that is bullish, below the vector, that is bearish, okay. And the vector is a support and resistance level basically, and it moves along with price, like right here you can see, right, it moves along with price, and it updates like live. There's not much delay on it, if that makes
Okay.
sense, okay. So if the price is like above the vector, so the price will take support from it, okay, it will act as a support, the vector will act as a support. And when the price is below it, it's gonna act as a resistance. Make
Okay.
sense? Like right here,
Makes.
it acted as a resistance.
Yeah.
So this is like the most basic part. So do you have any questions?
Yeah. Could you repeat what you said about the price above the vector and above the pivot? A pivot? Did you say that was bullish?
Correct. Yeah.
Okay. And then below the vector and below the pivot's bearish.
Perfect. Yeah, that's
Okay.
the most basic explanation to that. Correct.
Yeah. 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 This all makes sense so far.
Yeah, perfect. So on the right hand side, you must be seeing these black lines, right?
Yeah.
So that is what the support and resistance levels are. So basically, if you see these black lines above the pivot, that means that they're going to act as resistance. Make sense?
Okay.
So,
Yeah.
like right here, you can see, just ignore the 50% band right now. I should remove these black lines right here. These two are going to act as resistance for price. Okay, so the price is going to find it hard to actually break above. So it is basically a resistance. Okay, and then below the pivot, these black lines are actually support. Make sense?
Okay. Yeah.
Pretty clear, right? Now we are going to talk about the probable bands. So these things right here. So for which I'm going to use this slider right here. Let's say that, you have a bullish bias for QQQ and you're expecting the price to go like above the pivot, right? And you're
Okay.
looking for targets. Now, the most obvious targets for you above the pivot is the 80% band. Why? Because 80% band means that when price transitions above the pivot, there's 80% chance that that price gets hit. For
Okay.
example, if we see a transition here, there's 80% chance we see 547.72. Then there's
Okay.
50% chance we see 550.44. Then there's 20% chance we see 556.18. Make
Okay.
sense?
Makes sense.
Yeah, same is for below. Like right here, like you expected a transition, and then you're looking for target, you target the 80% man, right? It's just
Okay.
like that. And as the price moves below, so like you can see the bands person are actually getting lower. That means that the the odds of price continuation are actually decreasing, right? So if somebody like you are looking for more downside, you got the odds like, hey, the fractal system is telling me there's 80% chance. For example, the price is at 20% band. So the fractal is telling me that there's 80% chance of reversal from this price point.
Okay.
Does that make sense?
Uh, yeah. How do you know there's an 80% chance at the that reversal point on the bottom, and it's not the furthest right candle where it's an 80% chance of hitting that mark?
For example, let's take this example right here. You see the price is at the 20% band. Is this visible? Like the
Yeah.
20%? So that means there is only 20% chance of continuation. That means that there is 80% chance of reversal.
Okay. So it's not. It's a 20. It's not a 20% chance it's gonna hit that target. It's a 20% chance it's gonna break that target.
Correct. Yeah, you can basically you can use it both the ways. It kind of makes sense. So we saw the reversal today, yesterday. Sorry. from this level right here, 20% band, right?
Yeah.
Then today we are just somewhere around the 50% band, showing us that there is only 50-50 chance of continuation, like reversal and continuation. Makes
Do
sense.
these variable change? Do these like 80%, 50%, 20%?
Yeah, yeah,
Do
we
they
are coming
change?
to that. We are coming to that.
Okay.
So these values, like you just mentioned, I was going to come to that. So these values actually change when there is a change with the pivot. And your question should be, when does the pivot change, right?
Yeah.
So the pivot changes when there is a transition above or below the pivot.
Okay.
Okay, as simple as that. Now, before I move on, is everything clear? Because now it's gonna get a bit complicated, just a little
What
bit.
do you mean transition above both pivots? You mean like the current?
Like moving above the pivot, like
Yeah,
right here,
current price.
price moved above the
Yeah.
pivot. So that's a transition, you could say.
Okay. Got
Transition
it.
from bearish to bullish price action.
Got it. Okay. Yeah.
Okay.
Besides that, everything's clear so far.
Now I'm gonna come to the point that, so what, like the pivot changes, but what value does it actually change? So
Okay.
for that, I'm gonna use the slider here again to go back in time to show you the transition. Now look at the vector price right here.
Okay.
What is it?
Uh,
546.55, correct?
yeah.
And what's the pivot price?
549.27.
And just as we're going to see the transition, just notice the change in the pivot value, the new pivot value. Look at what it changed to.
Yeah. 546.55, which was that old number before.
Yeah, that old number, the vector number, basically. So
Yeah.
basically, when whatever the price, like the whatever the number is, like of the price of the vector, like just before the transition, you could say the
Yeah.
pivot changes to that price only. If that
Okay.
makes sense. Let's go for another example, like for this transition right here, to make it more clear. Okay, so you can look at the current like vector price, that is
Yeah.
549.27, correct?
Yeah.
Now we are gonna move to the transition
Yeah.
549.27.
Yeah.
It's also written right here using the basically the introduction to the fractals. This is already an indicator in there. I'm
Yeah.
gonna show you that, and it actually tells you that the purple vector will become the pivot, right?
Okay.
That was like what we were just talking about, right? And it's also written right here that the pivot is the neutral point, above is long, below is short. Simple.
Okay. What exactly is the purple vector?
Like we were just talking about, like it's a support and resistance level that moves along with price.
Yeah.
So
Yeah.
Raghav, let me help you. The purple vector is it's a line plotted by a machine learning system that goes behind the scenes, and it's actually testing all the trades to gauge the strength of the bullish and bearish move. So there is some sort of machine learning that's going on in the back. Russell explains it very well, but that then plots the result of that plots the vector, which is the purple line, and then it acts as a support and resistance line, and eventually becomes the pivot if it's broken.
Okay.
Make sense, Raghav? Correct me where I'm wrong.
no, you're right. Okay,
Yeah. Now that you explained each part, that whole sentence makes sense.
so I think the basics are clear till now.
Okay.
So if I ask you any question, will you be able to answer now?
Yeah. I think I should be able to.
So like let's say the price is at the 20% band, so what are you expecting?
There's an 80% chance that it reverses and goes above the pivot.
Yeah. Okay. Yeah. It's like if it's like above the pivot at the 20% band, so like there's a 80% chance of reversal. Correct.
Yeah, reversal. Yeah.
Yeah. Reversal below the pivot. Okay. Perfect. I think so. We are done with the basics. So next we can move on to the H and L values. For that, I think so I should use the Wayborn table.
You
Okay.
said H and L values.
Yeah. Highs and low
Okay.
values. I'm
Okay.
gonna come to that. So basically, you see these numbers at H6, H4, H1, H3, and all that,
Yeah.
and you see these L3, L1, 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 L2, all these right here.
Yeah.
So these are highs and lows values. So
Okay.
above the pivot, which is bullish, you form the highs. Correct?
Yeah.
Does that make sense?
Above the pivot, you perform the highs. Yeah.
Yeah. So above the pivot is it's bullish, so you form highs, right?
Yeah.
And below the pivot it's bearish, you form lows. Okay,
Okay,
it's
that makes
that
sense.
simple. Okay, and now the question is, when does a high or low form in these fractal charts? Okay, so I want you to like look at. I'm gonna zoom in. Yeah. So if I count the number of aggregation, for example, the number of candles above the pivot right here, there is one, two, three, four, five, six, and how many highs do you see? Six highs, right? So it's marked as H6. Does
Okay.
that make sense?
Yeah.
Same is for right here. For example, below the pivot in at this red candle, there should have been an L1, right? And then
Yeah.
another low formed, so that is L2.
Yeah.
And then the third low formed, that is the L3.
Yeah. So the lows and highs stack on each other when it's a lower low or a higher high.
Yeah, correct. 100%, 100%. That's
Okay.
perfect way to put it. Yeah. And basically you can also get stats for these HNL values. Now, let's say you're trading and like I'm seeing the prices at six. Now I know that on wave one daily you rarely see at six.
Okay.
Okay, so to look at the odds of reversal or continuation or formation of a new high the next day, right? I can go into the options analyzer. Here I right clicked and went to the
Yeah.
options analyzer. So here is the options analyzer. Okay, I'm gonna close this panel right here for now. So here on this first graph, you see the statistics for the H values. And on
Yeah.
this second graph right here, you see the statistics for the L values. Does that
Okay.
make
Yeah.
sense? So right here, with the first graph right here, you can see currently the market is at six, correct?
Yeah.
So now I can look. Is it like perfectly visible? Hope it's not
Yeah.
blur. Okay. So at six, the formation of for at six is 4%. That means that there is only 4% chance to actually form the at six value. For example, like last week on Friday, I shared the analysis that we were currently at H5, and the odds of formation of H5 were just like 7%,
Okay.
and the formation of H6, the odds of formation of H6 is just 4%. That means that there is 96% chance we see L1,
Yeah.
right? But we did not see it was an outlier move. So okay, that's completely fine, right? And let's also take example of below the pivot. For example, you're seeing the price is currently at L1. Now, what's the probability of seeing L2? You can see right here, it's
19,
32%.
32%. It's not the top percentage, the bottom one.
Yeah, you gotta look at the bottom ones, not the
The bottom.
like the above one. They actually mean 19% means that the 19% candles below the pivot are actually L2s.
Okay.
Yeah. So basically, I don't look at these stats, like they don't really are pretty significant for me. I look at these only, if that makes
Okay.
sense.
Yeah.
And then we got this graph right here. Okay. So this one actually is useful to calculate the magnitude of the move. Okay. Now, if this is the normal plotting of this graph. Now, if I click on sort histogram, now it's gonna sort all the highs and lows according to the magnitude of the move. Okay,
Okay.
here it does not consider the highs and the lows. Okay, it considers the magnitude of the move above and below the pivot in
Okay.
percents, right? Currently, the H6 move right here, you can see at the arrow. So this is showing us the magnitude of the H6 move. Okay, I'm gonna
Okay.
stop looking at, yeah. So the move, so it's telling me that this move, the move till H6, the rally we saw was 4.7%. Okay,
Okay.
4.7% from the pivot. That is what it is trying to tell me.
What does that 4.7% mean?
That is it is telling me the magnitude of move above the pivot. For example, the pivot is at, it's showing me right here. So the pivot is at 526.83. So
Okay.
4.7% of 526.83, that is the value you're gonna get on that magnitude,
Okay.
basically.
That makes sense. So if you do 4.7% of 526, then it would get you to whatever price that
Basically, you
H6 is
can,
at.
you just need to add to 526 that whatever price you get, whatever
Okay.
percent is that. Makes sense, right?
Yeah. Why would it be useful to know the magnitude of increase?
I mean, just to compare that, where is the market, where is the cycle positioning right now? For example, this is like one cycle above the pivot. So if you want to look at that, for example, sometimes you see that using just H2, for example, this H1 was straight up like in the 12% region, right? Here,
Yeah.
looking at the options analyzer won't make sense because it's going to tell you that, hey, the odds of formation of H2 is going to be 48%, let's say. So that is not useful here, right? Because
Okay.
the
Yeah.
magnitude of move is like way too much. So
Yeah.
for here, you're going to use that sort histogram I just showed you,
Yeah.
because that is going to tell you in the past 200 days there has been 0 days above that 12% value, so expect the formation of L1. That is what it's
Okay.
going to tell you. So these are the basics basically. If you got any questions, you want any help that I actually help you pulling up these graphs on your fractals, let me know, because these are the very basics that one should be aware about. Now,
Okay.
do you want me to move to the graph settings?
Yeah, that'd be helpful.
Okay. So this is the graph settings. So first of all, we have the general settings, right? We have the show options. Okay. But I'm not gonna show you the show options right now because it's gonna be way
Okay.
too much for the first session, right?
Okay.
We're gonna talk about it some other day, right? So I'm gonna talk about the S/R. So S/R dot state machine. Now remember what I mentioned about the targets, right? If you want to look for targets, you got your probable bands and your S/R state machine. Now what do I mean
Okay.
by S/R state machine? Support slash resistance state machine. So basically what it does, it gives you targets. Using what?
Okay.
So basically you see the, like it's written closed here, closed, 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 right? So
Yeah.
basically these are targets for you above the pivot. For example, right here, you see them, how you look at them like they are open right now, right? As I move it above, move to the next candle, you can see all of them are closed. So all
Yeah.
these four targets are hit. Does that
Okay.
make sense?
So yeah, after the candle passes or hits
Price?
that dotted lines, it changes to close.
Yeah, that is like your target is hit.
Okay.
Yeah, and you can see the price for them right here. It's 537.72, 536.98 something, right? So that is the price for that open state. Does that make sense?
That makes sense.
Okay, same is for below. Like these lows are targets. As simple as
Okay.
that. We can put it like this way, and you can see the price for them. For example, and you're looking for shorts, right? I'm gonna be soon looking for shorts when we see different confluences on different time frames. We're gonna be looking for shorts eventually because we have to see a transition here. Okay, so for the transition, we automatically have our targets. We got 545.80, we got 540.34, then we got these open states if we do see more breakdown. Does that make sense?
Okay.
So that is,
Yeah.
any questions?
Yeah. So I mean, they're open both on the top and the bottom. So do you use that in conjunction with the bands to see if you want to like take a short there?
Which ones are you talking about? These ones or like these ones?
I was talking about the bearish ones under the pivot, like the 540.31. They're all open targets. Do those targets continue as the price keeps moving? Do they like are those targets only for a certain time period, or are they just forever there until the price hits it, or if the market
Yeah, they're gonna
closes?
be there forever. I mean,
Okay,
eventually price has to close these, like has to.
it has to. Okay,
Yeah, there is no condition as can. It will close those open state. That is that is like the wordings of Russell. Market, all market does is close and close the open states.
okay,
Yeah, that is all it does. Like in the past, you can see that is all it has been doing, right? Closing open states, close, 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 close.
close. Yeah,
Yeah, and these ones are open. So these ones are like, open targets that you can look for, right? So
yeah.
it's telling me that maybe not today, maybe not this week, maybe not this month. We are going to see 510.61. You are going to see it.
Okay,
There's no
eventually,
like if and buts to it,
yeah,
right? So that is about the open state. Now, open state and probable bands are like the very basic target system you can use inside of the fractal system. Okay, and in the graph setting, what else basics should we talk about? Yeah, we can talk about S/R triangles. Yeah. Okay. So what this thing does is that it tells you how many aggregation will it take to actually close that open state. Okay, so
Okay.
for example, for this at 6, you see it right here, right? It's not blurry or anything.
At H6, yeah, I see H6.
Yeah. So it is telling me that on an average, it takes 11 aggregation to close that open state. That is an
Okay.
average value. And the longest duration that should be taken to close that open state is 104. So it's
Okay.
telling me that it should take longest duration it should take to close that open state is 104 days, because we are on the daily, right?
Okay.
So if I change the aggregation, for example, to be 1015, so it's telling me that on an average, it should take 13 aggregation to close that open state. And the longest duration it can take is 33. Okay,
33. Okay.
it won't work 100% of the time. Like you gotta be clear about that. Okay, like here it did not work, right? But it's still a cool stat to actually just like look at that how much time will it take to close my target according to the fractal.
Okay.
I personally do not use this S slash R triangles because you could see, right, it wasn't activated by default on my system, right?
Okay.
So I do not actually use them personally. So right here,
Okay.
for example, let's say that this H1 sustains. What do I mean by H1 sustains? That we do not see any other high forming above this H1. Okay. Now the question is, okay, what kind of pullback am I expecting if I'm looking for a bearish trade? It's telling you, the system is telling you, look for 546.26. Okay.
Okay.
So it's telling you that red line projected move, however, the H1 has to hold as the top. Next is for the price to get under the vector line for the best setup slash odds of pullback. So these pullbacks move in a pattern, right? For example, you could see right here that how does the pullback below the pivot happens. First, it has to transition below the vector, right? Because
Okay.
the
So H
vector, sorry,
sustain for a pullback to happen, H1 has to sustain.
what has to sustain?
H1 or whatever H you're at, it has to sustain for a pullback.
Yeah, it has to sustain. If it forms another high, how will we get a pullback? So this if you're looking for a reversal, this H1 has to sustain. Price cannot get above 551.31
Okay.
if you're looking for a pullback.
Yeah.
That is your bare minimum, right?
Okay.
And then you got the pullback right here. That is like giving you that you can target 546.26.
And so before you take any trade, do you look for the high to sustain before you enter, or do you enter while the high is trying to sustain?
No, like what do you mean? Like, is it trying to sustain and it sustains? Like, can you repeat that?
Yeah, but like I'm just curious when you would enter,
Yeah.
because if you're expecting it to follow this red line projected move, would you want to enter on that H1, or would you want to enter after if after you see it sustain and it's like confirmation? Then would you want to enter, or would you want to enter on that H1?
Yes. So look, I'm also a human. If you're looking at it as a trader's perspective, will you be able to like enter at the H1 and look for shorts? Like, because of the odds, like let's say I'm looking at the odds. What is the odd to form H2? It's like 56%. I'd still not look for a downside here. So I will not. I don't think I have any confidence right here from this time frame telling me that just short at the H1.
The 56% chance from the what we're looking at before is the chance at H2 forms.
Yeah, correct, correct, correct. Right?
So then, yeah, it makes sense why that's
But
not
right
there.
now it won't make H2. You know why? Because
But
if I zoom in, you see that how many aggregations were there after we formed the H1? One, two, three, four, five. Correct?
yeah,
Not five. This is four only. I think so. Wait, let me just check. Sometimes that is the price line. No, one, two, three, four, five. Yeah, five. Right?
yeah.
So five aggregations after we form the H1. So next high that is going to form, let's say at the next candle, it's going to form another high. High means the price is going to get above 551.31.
Okay.
Let's say you're expecting that. You're not going to see a H2. You're going to see H6. And what is the probability to see H6?
Let's see. H.
It's not there because in the past 10 days you must have not formed at 6. Yeah, so there was no
Yeah.
at 6, right? So the high we can form according to fractals now should be at 7. And what is the
30,
probability to see at 7?
33%.
So is that a good odd, you could say, percent chance for continuation according to you?
No, it's not a good percent chance for
So
continuation.
so we won't take calls. We won't long.
Yeah. Okay. Also, I have a basic question about the H's. I thought, like when you form on the, uh, it's always like it has to stack on top of each other. So it's H1, and then a higher high would be H2.
Yeah.
But after H1, which is the red candle, there's like a lower candle, which would be nothing, and then there's a higher green candle. Wouldn't that be H1 again?
Where, like, you're mentioning here, right?
Yeah, so that candle right there that you're on,
So
would that
it
be H?
registers a new high whenever there's a higher high, right? Like you just mentioned. So it cannot
Yeah.
form as H1 because that H1 was already printed for the first candle after the transition.
Okay, so a higher high is not the candle before, but a higher high is it has to beat the previous high of all time or of all your aggregate.
So the higher high has to form above this 551.31. And right here, let's say, okay, we're gonna go a bit back here. Let's say this candle is already like printing. It has not closed yet on the 15-minute time frame. And you're expecting that there should be a new high, okay?
Yeah.
And there is good momentum, so there should be a new high. Okay, so the new high, for the condition to form a new high, that is H2, the price has to get above 51.31.
Okay.
Yeah.
So then, would you not see another H1 until it goes across the pivot and back up, and then you'd see another H1?
Yeah. So
Okay.
for, let's say you are wanting to see another H1. So to see another H1, basically the price has to get below the pivot and then back above.
Got it. Okay. So yeah, it has to, the formation of H1s are only or L1s are only after it crosses the pivot.
Yeah, yeah.
Okay.
Only.
Only after it crosses the pivot, and
Yeah.
then an H2 and L2 is only if it makes a higher high or a lower low.
Yeah.
If let's say the price you make a L1 and it goes, the pivot is 100, it goes to 98, and then the next candle is 99, that wouldn't be an L2. But then the third candle becomes, let's say, 95, that'll actually be an L3.
Yeah, I know.
Okay, just so you
That
know.
makes sense.
Am I right, Raghav?
Yeah, yeah, yeah. So for the fractals to register it as a high or a low, it has to close high, like above or below the pivot respectively.
Okay.
Yeah, that is the basic condition.
Okay.
Yeah. So let's talk about one more thing, then I'll get back to. Let's talk about. Oh yeah, we haven't talked about the standard deviation. It's gonna be perfect. Talk about the standard deviation.
Also, so quickly, do you use the average pullback then? Because the average pullback said if H1 sustains, that you should follow that path. But then we also saw that when we like looked into the data that that the odds are 56%.
Me personally, no. First of all,
Okay.
like I trade with your like dad, like almost everything. We trade together for like 1 week. What we talk about is OMM, the
Okay.
options data, and sometimes we look at the fractal charts,
Okay.
right? And the most important thing, the tabletops and the side exits, right? So that is like what we look at the whole day on the TOS, right? So tabletop is like a part of the routine. Like we have to look at it for our entries and stuff, right?
Okay.
At least I personally do. I only take entries, or I mostly take entries, I would say, on tabletops or side exits, either on my contracts or just longing some ticker, like for example QQQ or like NQ.
Okay.
Yeah. So yeah, you can personally, for example, you're gonna start using Fractals. You can use the average pullback and calculate the odds of it working out. You know
Yeah.
that way it could be useful for all of us.
Okay.
Yeah. So next thing we're gonna talk about is the standard deviation. Now this is something I personally use. Okay, and what it does. Simple concept. When the price is like, for example, these dots. Okay, these represent price in a way. Okay, when these dots are there in the standard deviation squeeze, so it's telling
Okay.
you that prepare for a volatile move.
Okay.
Okay,
And how do you squeeze?
like you let me You see the word squeeze, standard deviation squeeze.
Yeah.
So that means that is the squeeze area. You see these
Okay.
dots? They're
Yeah.
like in the squeeze. So it's telling you prepare for a volatile move. And guess what? We saw it here. We saw the volatile move on
Yeah.
Friday, right? It was an expansion from the standard deviation squeeze, right? And
Yeah.
uh, till now also it's like trying to continue above, like the squeeze, like the volatility squeeze is still working out. That
Yeah.
is the middle value for the, like, it's like zero point 0.7 is like the middle value. It keeps on changing for different time frames. Okay, it's not the same for every single time frame. Okay, and the
Okay.
next thing is when you see that, it's trying to, form like a curvature here, it's trying to reverse.
Yeah.
That means the volatility can decrease here. Okay, so
Okay.
it's telling you that you can, price is like tired of a high volatility move, so it's gonna take a rest here. Okay, rest till when? Till the price gets into the squeeze, and then
Okay.
it's
So
gonna move again.
when it's up, when it's at the expanding, it takes a rest.
When it's expanding to the downside, it takes a rest. I mean, the
What do
volatility
you
is low.
mean to the downside?
Like you see right here, it's expanding to the downside.
Yeah. Yeah.
So that it's telling you that it's trying to take rest, and it's expanding to the upside means the volatility is like in increasing mode. You could say it's a high volatility move.
Okay.
That's the basic. And sometime when it's flat, it's like again a reversal or like consolidation move. Okay,
Okay.
yeah, that is like all it does. And like using the standard deviation, you can mark these points that are here, like using it's kind of like a resistance here. When you see that it's somewhere around the zero point 0.5 or 0.5.5 area, I'm just using an estimate number according to these numbers right here. You could look for consolidation or reversal, right?
Okay. Why can you look for consolidation or reversal?
That is my personal notice, that when you see a curvature like this one, like this,
Yeah.
or it goes flat, that means we are either going to see reversal or a consolidation.
Okay.
And then when it gets in the squeeze, then it's good for us. You're going to see a volatile move for either of the direction.
Okay.
Yeah. And then you have the macro trend right here, what it does. Now the macro trend is like used for the bias, you could say. Okay,
Okay.
when the macro trend is like green, so it means that the like overall bias of this time frame is bullish.
Okay.
Does that make sense? Here
Yeah.
it was red, so it was like overall bias is bearish, and you can actually take a look at it. Like how,
Okay.
you see, like the cycles after we got the green macro trend, the cycles for above the pivot are actually bigger, right? Here, if we compare like these two cycles, like even this one, the above ones, like above the pivot ones, are actually bigger, right?
Okay. Yes.
And here, when it was in the red macro trend, the cycles for the downside were actually bigger. Does that
What?
make
What do
sense?
you? Yeah, but what do you mean by the cycles?
Cycles is like a transition from above and below the pivot. That is like considered a cycle, right?
Okay.
So from here to here till this high, you can consider this as a cycle
Okay.
above the pivot. That is
Got
one
it.
cycle.
So from one high to the next high of the cycle.
Yeah, not from one high. I could say you should say from this low to this high. That is like one cycle. Let's put it
Uh,
this way. Okay, so that is like one cycle for us. So we're gonna look at wave one daily and wave 760 minute. Okay, so wave one
okay.
daily, as you know, the wave number is one here. So the transitions are gonna be more, right? And you can
Yes.
see right here at the wave 10-15 minute, the transitions, because the wave number was 10, so the transitions are lower, right? And here the wave number is 1, so the transitions are higher, correct? So
Gotcha.
this time frame we basically used for, like, for example, I want to know what's going to happen tomorrow, so I can look at the odds for it, and also look at the price action for it. For example, if you see that, for example, if you just see that the price action is currently right here, and it is forming L2, okay,
Okay.
540.93, it is exactly at the open state that can form symmetrical lows. Okay, so when two lows or highs are, exactly at a symmetry, that leads to the formation of symmetrical highs or lows. For example, right here, so you see this is a symmetrical high because these two highs are, matching, right?
Okay. So is it when the highs close that they're symmetrical?
Yes,
And they
they
move in the
have to
same purpose?
close the open state right here. This open
Okay.
state needs to be closed. This open state right here at L1 needs to be closed for it to be called like a symmetrical low, if that makes
Okay.
sense, right?
That makes sense. Yeah.
Yeah, so if the market goes down here and you're wondering that, it's L2, so you're wondering what's going to happen next. So you got the support here. That's okay. You got the support. Then what's the probability, right? You can go into options analyzer and look for it. After L2, there is 13% chance to see L3. So what is the chance of forming H1?
The chance of forming H1 would be 100 minus 13, which is 87.
Yeah, correct. So 87% chance to see H1. So what are you gonna like bet for? What are you gonna trade?
Yes, your bias would be long.
Correct. Easy. So that is why I use the wave one daily personally. I also use this for the spread monster derivation. We are gonna talk about that. It's a pretty wide topic, so it can take a bit of time. Also, I want to talk about the stacked open states. So sometimes you're gonna see patterns like this right here. Where you see like a trend line, and these open states are stacked. Correct.
Okay.
So this is forming a sort of compression. This compression has to be broken. Okay, maybe not today, maybe not tomorrow, but it has to be broken to take out those stacked open states. We have seen this way too many times, and the same is right here, right? These are stacked open states, correct? So these open states
Okay.
need to be
Yeah.
taken out probably like tomorrow or maybe next week. You never know. Okay, so this is like a compression forming, correct? This is a
Yes.
compression trend line. Now this compression trend line needs to be broken for us to see more downside, right? And also using this mean wave, I'm going to talk about mean wave in a bit, but you can understand the mean wave in this way. I use the mean wave to understand where the market fear is. Okay, if the
Okay.
mean wave, let me turn on the probable bands. If the mean wave is below the 50% band, means there's a fear for that direction, correct?
Okay.
Because what is the mean wave telling you? Mean wave is telling you a probable path that price can take. It is the highest probability path. Okay? And the path is showing me that the price should go below the 50% band. Right? So there's fear for downside, if that
Got
makes sense. We're gonna talk about the mean wave, that then where it comes from. It's okay. We're gonna talk about that. So I was just trying to show you the stacked open states concept, if that makes sense.
Okay, so if the mean wave is under the 50% band, there it shows the mean wave shows the highest probability path. So if the mean wave is under the 50% band, it shows fear on the downside.
Yes, fear for the downside. Correct. Same is
Okay.
for the upside too. If,
Yeah, if it was above the 50% band, it'd be fear on
yeah,
the
yeah, yeah.
long.
If it's
And when
near
you
to
say
the
fear on the
20%
long,
man, that's perfect.
yeah. So when you say fear on the long, you mean that people are scared of it going long.
Yeah, yeah, yeah.
Okay.
Okay. And the market makers are gonna position for the upside only if there's fear for the upside. You know.
There's fear for the upside. The market makers are positioned on what they have it. They're positioned long.
Yes, correct. 100%.
Okay.
Okay, so the next thing we are gonna look at the wave 760 minute. That is another good time frame. So same thing right here, okay? Wave 760 minutes, so you're gonna see more transitions compared to the wave one daily, right? And this is a 60-minute time frame, means this is the 60-minute aggregation. One candle we see right here is 60 minutes, okay? And
Okay.
you're gonna see that the transitions here last pretty much longer. Okay, so this is a bigger time frame, right?
Okay.
And basically we can go through the basics. For example, currently we are at H2 and you're wondering that what's gonna happen next. If we zoom in, how many candles have we formed after H2? One, two. So next thing we're gonna form is H5, I guess. So we are gonna look for the probability of forming H5.
Why are you looking for the probability of forming H5 specifically?
We talked about that last time because you see how many like or more highs have you seen above the pivot after H2?
Not H6, H10, 1, 2, 3.
No, here at H2.
No, over here. Yeah, not many.
Like no high, correct? Because after
Oh,
H2 there was no other high
yeah.
completing it. There was no other high above 555.73, if I'm reading that price correct, right?
Yeah.
They were just
Yes.
candles. These two red candles were not highs.
They were not a higher high. It was just another
Yes,
candle
they're
after.
not higher highs. So you cannot consider them as another highs this candle right here cannot form H3, and this candle right here cannot form H4 because it did
Yeah.
not surpass this open state right here.
Yes.
So if the next candle does, what's the probability that it is going to get above 555.73?
That would be the probability of each three forming.
Let's take a look at it.
So the
So
probability of each three is 56%. It says.
no, we're going to look at H5. You know why?
Oh,
Because there are already two candles formed, so H3, H4. So next thing that's going to form is H5.
it's five. Yes. Okay.
So what's the probability of forming H5? 45%. So it's mostly like you could say around 50%. So there's a 50-50 chance that we're gonna see uh, like the H5 forming. So we need to look for more confluence on our side, right? So what can we look for? We have the vector support and the pivot support. Okay, when the
Okay.
price is very much near to the pivot, you can actually mark that on your chart and use it as support because it does act that way. And many reversals have seen that the reversal happens above or below the pivot with the reaction from the pivot if the price is like near the 80% band on either of these sides, if that makes sense. Okay.
Okay. So you can use the vector and the pivot as support, is what you're essentially saying.
Yes, a lot of people do. If you look at the professional launch and look at the chartings of some of the people, they use the pivot and the vector prices, also the probable bands, right? Of course, the open states as targets too. If they are using the fractal chart,
But
that
these are constantly changing, right? And it's a self-fulfilling prophecy. So how could you
yeah,
use
these
them
are
as?
constantly changing, but it only changes when there is a transition. Even if you plot the like the previous levels, for example, if I plot 554.75 and there's a transition, that with 554.75 is still valid as a pivot. Okay, if you
Okay.
plot it on your level, it's going to be a reaction level. Okay.
Okay. So it's still valid even though it's changed.
Yes, if you plot it out, you can just test it. A lot of people do. Okay, and I can talk to some people I know who plot these charts and give it to you so that you can do a bit of homework with it, if that sounds good.
Yeah.
So this was
Yeah.
the basics we covered. Again, we can talk about the standard deviation, right? You can tell me the rules for the standard deviation. You know it if you know it. I told you
The
that.
rules for standard deviation.
Yeah.
I don't know it.
You don't remember? Okay, no problem. So simple rule: when the market is in the standard deviation squeeze, it means that it is preparing for an explosive move. Okay,
Okay.
so it indicates that when the market is in the squeeze, prepare for an explosive move either to the upside or to the downside.
Okay.
And when it's expanding right here, like right here, it's expanding, so it's expanding to one direction, right? So it's
Yes.
showing you that from that squeeze it is expanding till here. For example, it expanded almost to the middle of the standard deviation, like the middle of it, of the whole standard deviation right here, correct?
Yeah.
And it reversed right here, showing that the market is gonna consolidate a bit or show us a reversal. It did consolidate a bit before going back into the squeeze right here and continuing to the upside,
Okay.
right? With the squeeze
Yeah.
right here and continuing to the upside. Does that make sense?
That makes sense.
And these MNK signals you are seeing, basically you will see the K signal when the market gets above the pivot. You see the M signal when the market gets below the pivot. Does that make sense? It's pretty simple.
Yeah. So I just want to make sure, like, this is what I remember from last time. What I remember is that if the dots are in the standard deviation squeeze area, you have to. It means like to prepare for a volatile move, and
Yeah,
then
if
if
the
it's
dots are in the standard deviation squeeze area, yes, prepare for a volatile move.
and so if the dots are exponentially decreasing, it's less volatile, and it's like
Yes,
taking
yes.
rest.
If they are decreasing, it's going to be less volatile. Correct.
If the curve is exponentially increasing, it's getting more volatile.
If the curve is exponentially increasing, it means that it is continuing with the squeeze direction. It is showing you that.
Okay.
you know for example, when I mentioned about, you can also see consolidation or reversal. You can see it right here, right? We did see a consolidation here, right? And then here we saw a reversal.
Okay.
So in most conditions you should not see continuation happening, right? Like right here, sharp reversal from here, and then after that, what did we see? Consolidation, correct?
Yes.
And then
So if
we saw a reversal into the squeeze.
So if it's exponentially increasing, you will not see a continuation of whatever's happening. You'll see either a consolidation or a reversal.
Yeah, when it's like forming a curvature, I'm talking about. When it's
Yeah.
forming a curvature, that means we're gonna see either consolidation or reversal.
Okay.
So when it's increasing, it means that it is continuing with the direction of the squeeze when it initially happened. Does that make sense?
That makes sense. Yes.
Okay. So you can also look at it right here. Big standard deviation move right here, telling us that we are already reaching the max of the standard deviation, right?
Yeah.
And then the market took a break and then it started going down. Now here it did not work out. Our reversal or consolidation did not work out, and I assume that this must be some sort of news.
And news. Okay.
Yeah. And then after that, it consolidated right here into the squeeze. And then the squeezes were not that good because we did see overall consolidation throughout the session, right?
Got Yeah.
So the market makers have to participate in the squeeze. Squeeze is not dictate the market or somewhat, right? There are many days when the market stays in the squeeze and there is no move, like some sort of this move right here, consolidation, right?
Okay.
So we gotta
Yes.
avoid that. So this was the basics we covered, correct?
Yes.
So you remember the concept about the 80% band and the 50% band, do you?
I mean, from what I remember, that those bands are like are targets, and so if it gets to that 20% band, there's a 20% chance it will hit or break that target
Yeah, this band right here. So there's 20% chance that you hit that target and break it.
and break it. Yeah.
Yeah, this one's 80. So,
This one's 80. Okay.
yeah, these are pretty simple concepts, I guess, pretty basics. So the next thing we can talk about is the generate by signals.
Generate by signals.
Yeah, if you right click, is the third option. Cool.
Okay. Yeah.
So now I already got some stuff loaded with it, so I'm gonna go through all of this. So here I'm using the time frame QQQ wave 1 daily, and I'm using L1 all. So what it does is that in the past 200 days, it takes all the L1 possibilities that happen, and gives you the possible price action according to that. Okay, that is why I've chosen L1 all here because it works the best. You always have to use L1 all. Does that make sense?
Okay. Yeah. I keep going, and then maybe I'll understand it.
Okay. Yeah, so L1 here, you can see, what L1 we are actually talking about. You see the L1 here?
Yes.
So it's talking about that L1.
Okay.
So it's taking that L1 right here, and it's the same as options analyzer. It's pretty much similar to that. Does that make sense?
Yes.
And where do you see the probabilities? For example, I have look at my cursor. Look
Yeah.
forward this many trading days for results. It's written one here, correct?
Yes.
So it's one
Correct.
day forward looking. So I'm looking for tomorrow. What's going to be probability that we're going to see L2 or we're going to see H1? Okay.
Okay.
And
Got it.
here, this is the closure of that L1. Okay, you can see, it's matching the close price. Correct. Now here you can look at the probability. So it's telling me there's 30% chance for long and there's 69% chance, 30.8% chance for long and 69.2% chance for short. Okay.
And is that just general direction long, or is that 30% chance we're going to see that H2 and that bottom chance we're going to see L1?
Yeah, you can actually match with that because it depends on the magnitude of the move that we see L1, that we see L2 or H1 here, right? Because
Yeah.
let's say we go with our short bias only, and it's giving you a probable target of 548.17 right here.
Okay.
Okay, and it depends on the magnitude of the move. Sometimes we see that the candles are not that big, the overall range of the day is not that big, but the overall, what it's considering here is the low, for example the close price.
The
If
close. Okay.
tomorrow we see the price below the close price of L1 here, that means our bias worked out. Generate bias signals did its job.
Yeah.
So does that make sense?
That makes sense.
Okay, perfect. So right here, using these features right here, I plotted the resistance for short, resistance for long, and all that stuff is already in there. You can just check it out, but I'm going to explain it to you right now. So this is giving you a probable path for long, but I don't look at it. I like to look at the targets. Okay, I want to look at the targets. So it's
Okay.
giving me targets for the downside, it's giving me targets for the upside. Does that
And this is still for tomorrow, because in the bottom left it has that one in bracket. So this all the targets are for the next day.
can you repeat that?
Yeah, so all these targets are for the next day after this candle because in the bottom left there's a one in brackets that
Correct,
says
correct.
it's
Yes, yes, yes. You perfectly got that. So let's say
okay.
tomorrow our bias doesn't work out. So what are targets for the upside? It's giving you that. Minimal target is 559.26, then the low target 563.08, and 565.48. Then the max target is 595.02. Okay,
Got it.
so this is just for tomorrow. Now I can actually increase the number of days. For example, 3 day forward looking. Okay, so this is the 3 day forward looking. Now you can see the path and the resistance are much more clear, right? So
Yeah.
again, you can look at the bias. Now if you increase the number of days to load, for example, I'm gonna call this days to load. Okay, you'll understand it, right?
Yeah.
So if I increase the number of days to load, it's gonna get nearer to the 50%. Okay, like
Yeah,
right here it's 50%, right? And
that
let's
makes
say I
sense.
go around 50.
It's harder to tell in the future, so it's going to become more of a 50-50 move.
Yeah, it's gonna get somewhat near to the 50%. It's gonna try to give
Yeah.
you a, normal bias, because if you increase the number of aggregations you want to look at, and there's data, your data you are still using is 200, it's not going to be able to give you the best amount of results. Okay, so if you increase the DTL, yes, that can actually help you to get a better bias. But I use it only for 1 day now. Earlier, I used to use it for 3 days. Whenever the market was around Wednesday or Tuesday, I use it for 3 days. Just to get an overall bias that what it's actually telling me. Does that make sense?
Yeah. So tell me, Raghav, you use this for 1 day, and then before market opens, you go and mark up these lines in your chart. Like you'll draw a
Correct.
line on. Okay.
Yeah. Fractal gives you levels and odds. There are two things that you want to look at while using fractals. It just gives you levels and odds,
Got
right?
it.
Odds to hit level or odds to break. That is the best thing about the fractals, if that
Okay.
makes sense,
Yeah, it
right?
makes sense.
So this is for the 3 day, and this is the path for it. For the upside, we have this part right here that the next candle that can form should be a lower candle, and then you're going to see upside. It's just telling you a probable path,
Okay.
right? And it's telling you right here, the second path that the market can take is that it opens above the L1 close, and then it goes for the downside, for the downside target, right?
So how do you which one is the most probable path?
Of course we got to go with the bias.
You got to go with the bias. Okay, and the
Yes,
bias.
this it gives you the odds.
Yeah. So the bias is upside, and so that the one that is leading toward the longer side is the most probable.
Correct. Yeah.
Okay.
Yeah. So also these dots right here, I want to talk about these dots. These
Okay.
dots are also targets. If you mark them on your chart, these dots right here, so
Yeah.
these are the previous 200 days closes. Okay,
Okay.
in respect to the L1. So these can also be used as targets, if that makes sense.
Why could be used as closes? Does data like typically show that these are good targets?
Yes, even in the system, it's telling you right here, where it is, green dots targets. If I click on this thing right here, it
Yeah.
marks those, right? Green dots
Okay.
targets. So what is the generate buy signals do? It is considering the highs and the lows and the close of the previous 200 days load, and giving you probable targets according to that.
Okay.
So that is why it is giving consideration to the previous 200 days closes, either above or below that L1 close.
Yeah. And so why does it do it in relation to the L1 specifically?
Because I've chosen L1 here.
It shows L1 all, but why specifically like that last L1 candle?
Because the L1 formed right here.
Okay, so it's it chooses the most recent L1. Is that the
Yeah,
candle? Okay.
yeah. Because you want to see for tomorrow. So, you got to look at the recent L1. Then only you're going to get the data for tomorrow.
Yeah. So if the market ended on an H1, right? Let's say that's the last candle. Would it still go pick the most recent H1, or would you want to change it
No,
to?
the thing about this tool, this tool is still incomplete.
Okay.
You will still use the L1 all. Okay, because there is no another low,
Okay.
if that makes sense. Even if, my personal suggestion, even if we do see L2, I would suggest you to use the like the L1 all. because it
So
works the
you,
best, in my opinion.
okay. When you select L1 all, when you're comparing the consideration of all the highs and lows in the last 200 days, it's comparing this to the most recent L1 in the
Yes,
market. Okay.
correct, perfect. You got it. So this is what it's doing. So does all of this make sense to you?
Yes.
So if you watch this video again, will you be able to replicate it?
Yeah, 100%.
Perfect. Sounds good.
Very good at explaining this, Rob. It's very
You
clear.
know, if you got any questions about this one, I know that this is the probably the most difficult, in my opinion. If you
Okay.
got still got any questions, you can just let me know.
I
Right?
will 100.
You know, you can think of it because
Yeah.
I understand that this one is the most difficult one, and it also took me some time to understand what's really going on.
Okay. Yeah, I
Yeah,
100%
one
will
question
try.
I wanted you to ask is that what are these candles that are forming?
Oh,
Can,
the yeah, I didn't even ask. To be honest with you,
can you take a guess?
can I take a guess on what? I would assume that the candles are where it moves. Like it didn't close there, but and maybe there's a move to over there.
Yeah, exactly. You're not wrong. There's no wrong answer to this. So basically, these are the candles of the previous 200 days.
Okay.
It's matching to these close price, right?
Yeah.
And also showing you that these can be the possible candles for the next day. Okay. For example, if you match, the low is forming to this candle right here. It's matching to it, right? The low right
Yeah.
here and the high right here. Does that make sense?
Yeah. I also I actually now that I'm thinking of questions. Say you do this on a Friday, how accurate is it to the next Monday? Because there's those 3 days of non-trading.
Okay. So it does not consider that you are using Monday, Tuesday, Wednesday. It doesn't care. It cares about
Okay.
the highs and the lows.
Okay.
It cares that you're at L3, you're at L5, you're at L1. It cares about that. It doesn't care, yeah, you're on Friday or Monday or whatever.
Yeah.
Because it's considering the highs and the lows. That is all the concept is about. That is the basics of it,
Okay.
right?
So it doesn't
And
matter
the
if
next
it's
to that,
Saturday,
your
Sunday,
question,
both forms, it's considering it.
yeah, so it's considering the highs and the lows, not the day.
Even if it's after market hours.
Yeah,
Okay.
when yeah, you gotta use it when the market closes because you know of course the close price, you never know what the close price is. You can always
Yeah.
make an estimate, but you never know what the actual close price is, and you gotta use it for the actual close price to get the actual odds for tomorrow or the day after that or the day after that. That's
Got it. Okay. So it's the previous 200 days close prices.
yes, correct.
Okay.
Again, look, it's marked the close price right here. The close price 55.45, and the same thing right here,
Awesome. Okay.
right?
Yeah.
So this was all about the generated buy signals. Should I close it? Any other questions?
Yeah. Was this minimal target, low target, average target, high target on the right side?
I mentioned these targets 5 minutes ago that these are the targets for the upside. If
Oh, okay.
if
Yeah.
your bias, for example, we are using 3 days, so 50%, 53% chance. Let's say we're gonna have a long bias. So these are the targets. It's giving you the targets for the upside.
Okay. Yeah.
Perfect. All good.
Yeah. The rest of this. Yeah. Sorry. Thank you.
Okay. So next thing we got is the show options. I think so. I discussed the S/R dot state machine, right?
Yeah.
The open
Yeah.
state and the closed state.
Yes.
Correct. Perfect. Now if I reload right here,
So tell me, how do you know what waves and days to load is the best to pick and aggregations?
experience to be honest. I
Okay.
I cannot
Doing-
just give you an answer to that pretty easily because it's all experience. According to I have marked these time frames right here according to my experience that what I feel that the vector on it works the best or the pivot on it works the best or the geometrical patterns I see works on it the best. Okay, most of the
Yeah.
people I've seen use these time frames too. So these work the best. If you want to copy these, it's right here. It's being recorded.
Yeah. Awesome.
This is a bit uh like different concept, other than the
Okay.
fractals and stuff. Okay, this is not related to the fractal stuff right here. Okay,
Okay.
so you see these peaks right here. I'm gonna use the word peaks here, but I'm gonna change it pretty soon. You
Yeah.
see these peaks right here?
Yeah.
So the green ones you see, the green strikes right here, are the walls, are the call walls.
Are the call walls? Okay.
What do I mean by the call wall? Take a guess.
I honestly have no clue.
So the call wall is like a resistance. Call wall means that it's a resistance. It's like a wall for the upside, right?
Okay.
So it's a call
Yeah.
wall. It means that it is a resistance. For example, you see the peak right here, right? It's
Yes.
at the 558 strike. It's written 558 strike right here. So it's telling me that C558 is a call wall. It's a
Okay.
resistance.
Got it.
Does that make sense?
That makes sense.
Okay. Then we have the 560 call wall right here. Can you see it? You see the
Yes.
peak, right? That is
I
the
do.
560 call wall. Now this is what I personally use.
Okay.
Open interest data. I mark these walls. I have them on my chart. So basically, when you see that the peak is very high, like right here, the peak was pretty big, right? So
Yeah.
that is my target.
You target the call and the put walls.
Yes, because these are point of interest. So this is what.
Okay.
So here, these peaks are because of the open interest. On these particular strikes, there's higher open interest. That is why these are point of interest for the market makers. If the market makers let this strike right here in the money, they're gonna lose money. They do not want it to go in the money, right? If the
Okay.
price gets below C553, that means that P553, that means that P553 strike was let in the money, and the market makers are not gonna like that because they're gonna lose money.
Okay. So you're saying is that where the market makers took their position, so they didn't want it to go that low?
That is I, to be honest, yeah, that is the basic answer I can give you, but I cannot tell that what the market makers are actually thinking. But this is the basics of it, that the market makers do not want to break it. Do not want to
Okay.
let that strike in the money if the OI is very high on it.
Okay.
Okay, and then for the upside, we talked about the call balls, right?
When you say OI, you mean open interest, and so you mean when there's a high peak.
Yes, correct,
Okay.
100%. So this one right here, is this a call ball?
Let's see. On your cursor, yes. I would assume it's a call wall.
Yes. So what is the strike for it? That is 565. Okay,
Okay.
so that is a call wall. And for yesterday, I remember the reversal happened around 552.7 something area. That is very near to a 553 call wall, put wall. So the market makers did not want any break of it,
Okay.
right? And that is why we saw the reversal yesterday, if you remember. If you look at your chart right now, we saw the reversal somewhere around that area.
Around the 552 area.
Yeah,
Interesting. Okay.
yeah, that is why I like to use these walls.
Yeah.
Although this open interest data updates every single day at the open, and it does not update a single time throughout the day.
Okay.
Okay, perfect. Does that make sense?
The open interest you do the night before, and you mark up the chart, and you use it as
No,
targets for the
not the
next
night before. You gotta do it at the open,
at the open.
because that is when it updates.
So what time does it update? Like for the first 20 minutes of the
Nine
open, it
thirty.
takes 9:30. So like you do you start marking up your charts at 9:30 then?
Yeah.
Okay.
I mean, sometimes I have it in mind that these numbers are pretty easy to there are no pointers on it, so it's easy to remember. It's 553, 552, or 555.
Yeah, yeah. So you just write them. Yeah,
Yeah, you can ask your dad about it. So I give him the levels for this, and we keep it in our mind that when the price gets near it.
yeah.
So next up, we have the average strike call. Now this is similar to the ball average strike put, but the market makers do not want to break this. Okay, if we break this, that is considered outlier. Does that make sense? And
Break
even
what?
if, sorry,
What the average strike call wall?
yeah,
That green.
yeah,
Okay.
and even if we break it, there's a high probability we come back to it.
Okay.
Okay, market makers don't like to break this wall. I've always seen it that the market tries to come back to it and tries to hover around it, even if we do see a break. Does
That
that
makes
make
sense.
sense? Simple concept about it.
That makes sense.
Okay, so if you understood this concept right here, I think so we are pretty much set for the other stuff we're going to talk about right now. So it's pretty good that you understand this, to be honest.
Yeah. Does the closed and open state often line up with the open interests?
Yes,
Like,
there's some sort of relation with it, and the relation when you see these voids happening, that this dips right here, these dips
yeah,
right here, that indicates that market makers are actually positioning for that close. You know,
the market makers are positioning for a close on the valleys.
yeah. And yesterday wasn't the best day for it, but some days you're gonna see that there's a valley on two strikes. Okay, for example, you could sometimes see that there's a valley right here and valley right here, so there is dip on both the put side oi and the call side oi, so that is the best area of interest for them to close. Okay, so let's talk about these lines right here. That what do they actually do? So this is the frequency, okay, and where you see that the frequency is going flat, like it's going flat right here, that means
Yeah.
that the market makers are not positioning for that area. Where you see it rising like a peak right here till right here, so it's rising. So it's telling me that around 564 area, you can still expect that the price can go there. Okay, same is for the downside, right? We see that there's some sort of peak right here till right
Yeah.
here. So market makers are going to be interested in that area.
Okay.
But I'd suggest that you just use the call walls and the put walls. They work the best.
They work the best. Okay.
Yes.
I just
And
want to make sure I'm understanding that those the lines represent the frequency, and when it's flat, and the market makers are not positioning for that area.
correct, correct. Yeah,
Okay.
simple. Okay. So next up we have some settings for the linear graph. For example, if I turn on this, that turns on the linear graph like along the fractal graph. Okay.
Okay.
So it's up to you if you want to look at the linear graph, and also it marks the vector for it, right?
Okay.
This is the same vector we're gonna see at the wave 10 15 minute. It's just marking it right here with the linear graph. Does that make sense?
Yeah.
Okay, perfect. So next up, we're gonna move to the pivot graph settings. For example, if you want to change the the mode for it, for example, you have the light mode and the dark mode for your phones and stuff. You can
Yeah.
do it the same right here. If I click on dark, it should be dark. If I click on bright, it's all bright right here. Okay.
Yeah.
So I don't want to get blind anytime soon. I'm gonna change that. And then we have the night one. This is pretty cool too, but I keep it on the default as star. Next up, we have the fractal graph. So basically, analysis visible. So what does it mean by analysis visible? It shows you the double bottom. Okay, so what is the double bottom? In most conditions, it is the first open state below the pivot. Does that make
Okay.
sense? First of all, let me ask.
What's the double bottom?
I'm gonna tell you, but do you understand that it is the first open state below the pivot?
Yes.
Okay, so double bottom, what it does is that it tells you that there's a 51% chance that this open state is closed. There's a higher probability for this open state to be closed below the pivot. That is what the double bottom is.
Okay. So there's literally a 1% more chance that that open
Yes,
state is
it's
going to
a
be closed.
higher probability target. It's
Yeah.
a simple thumb rule about it.
Okay.
Yeah, pretty simple concept. And then we have the mountains visible. This is more like a visual tool, nothing to do with the analysis, right? And then, to be honest, what should we probably talk about? Yeah, we can talk about the pine candles. Okay, pine graph. Okay, so if I click on dot right here, you can see that the candles have changed. So this is like this tool right here. These candles right here are not available in any other software. Okay, so what I'm going to
Okay.
show you right now. So you see these dots.
Yeah.
Let me just check. Well, yeah, I'm gonna remove tag for now. You see these dots? So these dots are showing the close for that 15-minute candle.
Okay.
Okay, you see this dot right here. That is the close for that 15-minute candle at 15:45, and the same right here at 15:30. Does that make sense? Simple,
That makes sense.
perfect. Should I move
Perfect.
on? Okay. So next up, if I click on volume square, so it's gonna integrate volume with those candles. And what
Okay.
do I mean by volume? Basically, you see those squares right here, these volume squares.
Are they replace the dots? They're squares now. Yeah.
Yeah, these squares right here. Okay, let's
Yeah.
take a clearer example. So there are four squares right here. Means there is 4x the volume. So this is a high volume candle.
Okay.
So it's telling you that. And bear, sometimes you see that. Let me use a lower time frame maybe. So when you see that some of these dots are collected in one place, like right here, a lot of volume is congested in one place. It means that the market is preparing for a sort of reversal.
Okay. So when there's a lot of squares, when there's a lot of closing candles that have a lot of squares that are very close together,
Correct?
is
We
for a
can
reversal.
expect a reversal, and we saw it.
Okay.
Same is right here, right? Same is right here. Does that make sense?
Yeah.
And same is for the downside. When the market is going to be below the vector, of course it's bearish, right? Basic rule. So it's going to represent all those squares, all the closes as red.
That's right. Okay. Yeah.
Does that make sense?
That makes sense.
I hope it's not getting too much.
No, it's not too much. It's actually it's perfect. Also, I like seeing a lot of information. Then I go and I rewatch these videos like 2 3 times, and try
Perfect.
to understand.
Then we have the macro trend. I'm going to talk about the macro trend right here. So you see this macro trend right here. I explained to you about it.
The bottom one with the standard deviation, that's the macro trend.
This one right here, this green and the red. Remember we talked about it last time?
I don't remember talking about it last time.
You don't? Okay.
No.
Okay, we can talk about it again. So basically, it's showing you a bias. Where you see green macro trend, they're gonna be like the cycles above the pivot are gonna be bigger. So it's telling
Oh,
you that.
I remember. Yes. So when a cycle is a transition from above to the below the pivot, the lowest low is to the highest high, and that's considered one cycle.
Yes, you remember that we talked about it. Yeah.
Yeah.
And then the macro trend, we are gonna talk about the macro trend. Macro trend basically means a bullish bias. Green macro trend basically means a bullish bias, and the red macro trend basically means a bearish bias.
Okay.
you know and when there's a green macro trend, the cycles above the pivot are going to be bigger. You see here the cycle is bigger compared to the
Yes.
downside cycles, like right here, right?
Yes.
And same is for the red macro trend right here, the cycles are bigger, right?
When you say bigger, then you mean like longer.
Yes, I mean, of course, longer and bigger.
Yeah.
So yeah, and in the red macro trend, you can see here did not work out, but it was fluctuating here. Again, consolidation, it ruins it all. When you see consolidation, so the macro trend also get confused that what the market direction is currently.
Okay, so consolidation confuses with the macro trends.
Yes, correct, 100%. Right. So this is the pretty simple concept of the macro trend. Now, if you want it on your chart, like this chart right here, you can actually add it through this tool right here. Okay, for the long macro trend, I'm gonna increase the opaqueness to 80. Then let's say I'm gonna change the color to green. Right. Now look at the macro trend and this chart right here, and the chart right here on your fractal chart.
Yeah, this is a lot more visible.
Yeah, you see the macro trend is marked right here on your chart along with the macro trend that is shown right here. So that is the same macro trend,
Okay.
right? And same I can do for the short color. I wanna do it red. See, it's 85, and you can see wherever it's red macro trend, it's just marking it red. Does that make sense?
That makes sense.
Yeah, perfect. All good.
Yeah, and that's okay. That's in the macro trend setting.
Yeah, so it's matching the macro trend basically. Basically, it's not a different like whole new feature. Basically, whatever macro trend you have right here, it's just marking that. So what the wave analysis does, so it shows you path in simple words. Remember what I
It,
mentioned about the mean wave? You know what the
yes.
mean wave is? The mean wave
Yes.
is the average of all these waves right here.
Okay.
And you know why I mentioned that there's fear for the downside or the upside? If all these waves, if the average of these waves is showing you that the market should go below the 30% band, that means that the overall fear is for the downside, right? Most of the probable paths are below the 20% band right here. You see?
Okay. Yeah.
So these curvatures, these are paths. So it's showing you all these paths right here. This is a
Could
path
you,
above the
who
pivot.
has the downside if this is the general trend that's like is assuming it's going to go down? Who exactly like you're saying there's a general fear for the downside? Like who? Like are you talking about market makers
Yes, market makers. So basically they're gonna position for the downside.
market makers are going to position for the downside?
Yeah, and this doesn't have to work 100% of the time, but it gives an overall bias where the market can go, if that makes
Okay.
sense. I mean, that's pretty clear to you, I guess, right?
Yeah.
So this is what I personally use, the wave analysis. And where you see that a lot of curvatures are happening, like right here, two waves
Yeah.
are curvating, forming a curvature. That is like a support area.
It's a strong support like that. That price level is a
Correct,
strong.
correct. Strong support. Same is with the mean wave. Mean wave is a strong support or resistance level. Now, if I go back a bit in time and show you the candles for the upside, yeah, you see, the probable path showed me that market can go above the 20% band, even though we did not see it, but we saw that the market went above the 50% band, and most of the the projected wave paths you see are above the 50% band right here, correct?
Yes.
And there's a
Correct.
strong resistance right here. You can mark it on your chart. You can
Yeah, I
mark
see
these
that.
curvature prices on your chart, and they can help you with reversal prices, if that makes sense. Also continuation. For example, if you see that this wave is being broken, you can target the next wave.
Okay. You want to target the curvatures because those are like the peaks, and so those are good points of interest and exit points.
Yeah, 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 yeah. Also,
Okay.
you can see if you look at very closely, if you just zoom in, there's always one path that the market chooses. Okay. For example, right here, the market chose this path right here, and it reversed from that exact high of the wave.
Yes.
You see that?
Yes.
That is why I love using this tool, because in the fractal charts, it just makes it super powerful for me, according to me.
Okay.
Right?
And when does this all updates at 9:30 in the morning?
No, 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 no. This updates whenever there is a transition. So the system is calculating that. It has nothing to do with the options data.
Okay.
Whenever there is a transition, you can see, right? Whenever there is a transition, these waves change. The mean wave changes and all that, right? It changed,
Yeah.
right? Because there was a transition.
And so how far behind is this fractal data behind live market?
For the futures, it's 10 minutes, and for the indices like we are looking at right now, it's 10 to 15 seconds max to max.
Yeah.
Yeah, it's not that delayed. You can use it. Of course, I use it every single day. We have to.
Yeah. So this is only 10 to 15 seconds behind. Wow.
Yeah, it's not even. It's nothing, to be honest. Okay, so let me just take a look at the feature we had, the bullish and the bearish filters. So filters is very similar to your probable bands, because it does the same thing. For example, if you see 10% right here, 10% filter, so it's telling you there's a 10% chance that we see a rejection from it. Does that make sense?
So could you repeat that one more time just so maybe I get it? Oh, and now that I see the band, it makes sense. So off that top line, there's a 10% chance that there's a
No,
rejection
50% chance, because I have the 50% filter.
filter
So
on.
there's
Okay.
50% chance of reversal from it.
Okay.
Now if I go to 90, so there's 90% chance we see the reversal from here. Simple.
Yeah, I understand now.
That makes sense.
Yeah. Do you personally use this often?
I use the average.
Use the average that which is what we went over
Yeah,
before.
this is the average. Now what it does, it shows you a breakout level.
It shows you a what?
Breakout level.
A breakout level. Okay.
Yeah. Basically it gives you a range for above the pivot and below the pivot. And when the market breaks it, it basically outlier. You can expect, basically an outlier move to the upside or the downside. And you can
Okay.
see it
So
right here.
when it breaks
So
this
this
average filter, you expect an outlier move of like a big breakout.
yeah.
Okay.
And then the next thing we have is the group filter, and the group filter right here. So the group filter in most conditions form whenever like there's some sort of cluster there. Above the pivot,
Okay.
there was no cluster right here, so it did not show us any like a group filter formation. Okay, like right here, what is a cluster basically? Whenever these black lines, just collect in just one place, means that there's a lot of reversal from just one place. It tells you that that is forming like a cluster, if that makes sense.
What do you mean the black lines? I don't see what you're talking about. You
These
mean the
imprints,
sticks
these
of the
black
candle?
lines, these imprints.
Oh, those imprints. Okay.
Yeah, you remember these, right? From our last
Yeah.
call.
And those show you a cluster.
Correct. So that is the cluster, and that is a strong reversal area. Let me just go to any other time frame wherever there's a cluster for me to show you.
And we said the thicker the line, the bigger the cluster.
The thicker the line, there is the higher the chance that there's going to be a reversal from it. And you can see right here, this is a cluster right here, right?
Yeah.
So that is a that is like a probable area for reversal. You can expect reversal from there, right? Because
Okay.
why do I say that we're going to expect reversal from there? Because in the past 50 days, because of the days to load via 50, it has shown me that, market has reversed from this area, right?
So
A lot of times, because
the black
due
lines
to
on the right where the market has reversed.
yes, so basically, these imprints, I remember that I actually explained this, that when these imprints actually form, these imprints form, for example, the market reversed from 534.39 right here at H2, right? You can see my cursor, right?
Yeah.
And when we see a transition, that, that high is going to lead to the formation of an imprint.
Yeah.
Okay, and then these imprints get collected in just one place, that forms a cluster. And when do they collect in just one place? Whenever there's a reversal from that one particular area way too many times. For example, reversal from this area happened here, here, and then here, 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 and also
And
here.
so that would be a good target for a reversal. And
Correct.
a reversal is defined as a change over the pivot.
A reversal is defined as a transition below the pivot. Yes.
Yeah. Okay.
Yeah, so that is like the basics about the cluster. Basically, I personally use the cluster whenever I want to look for a reversal, and it most probably forms near the 80% band. And of course, remember when I was talking about the macro trend, sometimes you do see this squeeze, that the market is in the squeeze and it stays in the squeeze, and there's no explosive move. You can see it right here.
Yeah, it's all in the standard deviation squeeze, but we don't see any volatility. It's
Yes,
all
exactly. And here we did see the explosive move. Does that make
yeah.
sense?
Yeah, that makes sense.
Yeah, that is why I like to use the standard deviation squeeze. But I use this for my swing setups, right? Because on the daily, it gives you a much clearer idea that you can expect a squeeze here, you can expect a reversal here. For example, if I go to the page 7 daily, you're gonna see that the standard deviation is much more clear here. Okay, for example, squeeze right here, and you can see the explosive move,
Yes.
right? So that is why I like to use the standard deviation squeeze mostly on the daily time frame, if that
Okay.
makes sense,
That
right?
makes sense.
Okay. The next thing we gotta talk about is the markers. So basically, H and L. Basically, if you read these, they're gonna make sense. Okay, there's no rocket science in it. So H and L, above and below wave sequences. Basically, it marks whether the wave sequences are forming high or lows. Basically, it's gonna mark the H and the L alphabets.
Okay.
If there's L formation right here, so it's gonna mark it as L, but not gonna show the two number. That is the next feature. Number of aggregations to the H and L value. You see it right here. It's forming
Yeah.
L2, so just showing you that.
Okay.
And show price above and below the wave sequence. Wherever it forms the high, it shows you the price that, well, it's the price of the H1 or H2. For example,
Okay.
H1 right here. Then we saw the reversal. Basically, so the for the cycle, the high was 55.70. Does that make sense?
That makes sense.
Okay, show the differentials between the H and L price. Basically, what it does is that it tells you right here that, from this low to this high right here, the difference was $2.05.
Okay.
That's all. From the cycles. Remember.
Yes.
So, and then it shows you the percent change value from that, cycle, 0.4%. It's written right here.
Yes.
From this low to this low, there was 0.5%. Does that make sense?
That makes sense. So I'm
Okay.
seeing all this information, but how do you put it to use? Like
Now, this is like for your own idea, that if you want more of a visual tool, that and look at the price above the wave sequence, what is the price for the H1, you can just use that. That is why I do not have it on, because I don't have to use it, right?
yes.
And I'll
Yes.
remember what I mentioned about the analysis paralysis. You don't want to use every single thing.
Okay.
This
So
is
you
again
just
like a charting software like TradingView, TOS, or Motivate. It
yeah, so
gives
you
you
just
the
take the
all the
process.
levels. Then it's up to you that whether you want to use it or not, right?
Yeah, so yeah.
So
So
all that makes
you
sense.
predominantly just take the wave you just predominantly use the wave analysis with the multiple waves,
Yeah,
correct?
wave analysis, open interest, OMM, MM, and yeah, spread monster.
Okay.
Maybe I'm missing something, but we can cover that when we go on. Basically, now show the time for the HNL value. So basically, it's the time again. Then what was the time in the high form? What was the time in the low form? It's like more of a visual tool, right? Does that make sense?
Yeah, yeah.
So what it does, this is basically, you see these imprints right here. This is again a visual tool, so it's marking those uh, HNL dots right here. Okay, for example, at this low right here, you can see the dot, and these lows right here, you can see the dots. And then we have the 50 double bottom. Now, I like to use the double bottom. I want to see that, if there's a higher chance to see a particular open state, of course I'm going to use it. Basically, it shows you that, when that the day and the date for that high to form. For example, this formed on Thursday and 10th of June, I guess. No, 10th of July, sorry. Right? So this basically showing that this H11 formed at Thursday, 10th of July.
Okay, so it shows you when the level was
Yeah,
formed.
yeah, yeah, exactly. You see these imprints?
Yeah.
These imprints are the open states only.
We just discussed this 10 minutes ago too. I'm so sorry. Yeah, I
No,
have
no,
it
no.
written.
It's all good. Yeah, it's don't worry. It's no problem. That's my job. So you see that these highs and these lows are not covered by price, right? This one's covered. This high was taken out, correct?
Yes.
But these lows and highs haven't been taken out by price, right? So
Yeah,
these
that's
are
what.
open. These are open targets,
Yeah.
okay? And basically, that's how the open states are formed, and the closed states are formed right here when the price closes it. Let me just go to the graph settings again. Next up we can talk about is the show guidance navigating fractal information. This one, remember, we had in our previous session on, right?
Yeah.
This tool right here. So basically what it does, it gives you targets. Now this is pure spoon feeding kind of tool, and I love it. And what it does, it gives you targets for above and below the pivot. So basically when the market is below the pivot, you can see the targets for the downside. It's giving you targets.
Okay.
Of course, there's a higher probability that the first target gets hit compared to the downside targets. Now, even if I go back a bit in time, you can see the targets for the upside shown here. Market doesn't have to close it. It's just, for a beginner perspective, it's just giving you targets. And personally, if you ask when do I use these, I use these on my daily time frame for my swing setups. When I need targets.
Okay. So use it on your daily time frame. Okay.
Yeah. Daily time frames means above wave 7 daily, like wave 20 daily, wave 50 daily, wave 7 daily, or wave 10 daily, like that. Now we have the show cycle analysis. Now this is a bit, remember the cycle concept?
Yes, I do remember the cycle.
Yeah, so keep that in mind. Okay, so it's going to be used here. Okay, so let's talk about the cycle analysis. So first of all, I'm going to tell you that what it does, and then we're going to get to the analysis part of it. You see that
Awesome.
this bar right here, basically this toolbox that is forming, right?
Yeah.
So that is the cycle analysis. Now if I click right here, it's going to disappear, and here it is.
Yes.
That is the cycle analysis. You see the cycle analysis above the pivot, it's forming right here. So what it
Yeah.
does, it basically forms one cycle from this high to this high.
Okay.
Okay, that is considering like one cycle. Now it tells you how many aggregation it is right here. From, it's forming the arrow from here to here, it's 19 aggregation. So it's telling you the like the number of aggregations that form in that cycle, according to the cycle analysis. Does that make sense?
When you say the number of aggregations, do you mean the number of candles that happened
Correct,
during that?
yes, candles.
Okay.
Right now, same is for below the pivot. You see the cycle analysis here. From this,
Yeah.
you see the line right here that's forming.
Yes.
As you see, it's exactly matching the L1. So from this L1 to this L1 right here, there was 16 aggregations.
16. Okay.
Does that make sense?
That makes sense. But where do you see where it says 16 aggregations on the bottom? Okay,
You
I
see
see
the
it.
number 16 here? Is it
On the
visible?
bottom side, yeah, there's also two blocks on the bottom side. Yeah.
Yeah. So basically, it's trough to trough and peak to peak. Peak to peak here, trough to trough here. So basically, now how do you use for analysis? When you see that there are repeating numbers on your cycle analysis, for example, if you see 8 being repeated again, so that is like a probable number for reversal according to the
Okay.
previous data, right?
Yeah.
Does that make sense? Okay, same is
So
for above. Now it tells you that the average cycle is 24 aggregations, even though this one did not match it. So basically, you can use it as a target either for the upside or the downside. Let's say that the market is right here and you're looking forward to trade more to the upside, and you're wondering that, okay, how many more aggregations can I expect here? So basically, how many more highs can I expect here? That is your question, right? And you can look at
Yeah.
the cycle analysis that we still have buffer for six more candles, even though it doesn't have to follow that rule.
Is it going based off the previous cycle or the the total amount of cycles, like the total average of all the cycles?
Average is like considering all these cycles right here and then giving you data.
Okay, so the average cycle is 24. So that's saying like, oh, we have five. We can expect five more highs before a reversal.
Yeah, six more
On
highs.
or six more, yeah.
Yeah, six more highs before reversal. That is what it does. That is what the cycle analysis is about. And then
Okay.
you see this small macro trend right here. You see the
Yes.
green and the red.
Right. Yes.
That is like in each cycle, this too gives you a separate macro trend along with the main one right here.
Okay. So, but the cycle for the macro trend is different from the cycle for this.
Yes,
Uh,
yeah, it is more sensitive to the price action.
which one is the?
This one's the cycle one is more sensitive to the price action compared to this
Okay.
one.
Cycle analysis cycle is more sensitive to price action.
Yeah. Okay, so that is all about the cycle analysis. I personally use it sometimes just to know that like what how many, like what's the aggregation number we are forming on the current cycle and what was the average to actually get that if you're gonna see a reversal or not here. Okay, according along with the other confluences if I'm looking for one. And okay, so next up we should be talking. Yeah, sorry, we should be talking about the imprint bands. Now, imprint bands is pretty easy, I guess. Now, it's gonna be understood when I click this on. So, are you able to understand what just really happened here?
Yeah, the more lines popped up. That the bands popped up. I think they were gone, and there's also additional
Yeah,
lines.
exactly. So basically, all the imprints above the pivot are marked with green, and all the imprints below the pivot are marked with red.
Yes,
Are you seeing that? So that is what the
yes,
imprint band does. That's all.
that's all. Okay,
Yeah.
it's very visual.
Yeah, it's yeah, exactly a visual tool again. You know, because these lines do not extend till here. So if you want a visual tool that you want to look at them, so like for example,
Yes,
if you assume that there's a cluster forming, you can see a lot of red color right here. So that's a cluster, right? So you're gonna
yes,
mark that as a support on your chart,
yes.
linear chart. So that is it's like a more of a visual tool. So that is all about the graph settings. Let's talk about the data warehouse. Yes. So I'm not basically, if you know structured query language coding, so you're gonna be doing pretty good with this tool right here. But I'm gonna go through that some of the inbuilt default queries in it. For example, for the Monday volatility, you can run this query right here. So basically, what it does is that we have our different databases, and in those databases, you can make code and derive data from it, right?
Okay.
Because basically, if I want to look that the what was the day range for Monday, for all the Mondays, right? So you
Yeah.
can ask for that using this query right here. Does that make sense?
Yes.
And how to use it now, how I personally use it is that I get the spline chart on, and basically it gives me sort of a chart for support and reversal area. For example, this is in the ascending order, so I should see the latest ones right here. So basically we are at a low of the range. So next Monday we should expect a high range, probably in the above the 5 area. Why? Because you can see right here when we saw this low right here, we saw a range like around 10, right, near to 10. About this was about 7, I guess, right?
Yeah.
And whenever the market is in this area, the day range is in this area, this lower area, we do expect some sort of higher range the next time.
Got it. Okay.
So that is how I use the day range. Now there's a lot of stuff about the structured query language. Now if you know coding, when you log into your system and look at this tool right here, you can understand it yourself. Okay,
Yeah.
so I was just
This is,
trying to show you that what it actually does and what kind of stuff do we actually have, if that makes sense.
yeah. This is very interesting.
Yeah, you can also look at the OMM data. If you know the OMM data, or I'll just explain it to you in a bit. Like the Monday range, Tuesday range, and the Wednesday range. You have those, right?
Okay.
Yeah. So basically, it's giving a lot of stuff. Basically, you have a lot of databases. So if you know coding, you're going to be able to derive all those queries and derive data. For example, if you want to look at the ceiling and floor and the PML price of the latest updates on all the tickers, you can see it right here. So that is all about this data warehouse. So this is like nothing for me to explain it to you. If you know coding, you're going to be able to uh, understand it pretty well, if that makes
Okay.
sense. Next up, we can talk about is the algophone. So this is the algophone. So basically, algophone is a very visual tool. Again, this is what so it gives you kind of an edge over your setups. Basically, this tool is that it makes sure that you do not lose any kind of setups, right? So, whenever if you have a setup in your mind, for example, you trade that whenever the price gets above the 80% band, I'm going to take that call. So, you can code in here, like right here, that, if you want the price to be above the 80% band, it's going to show you all the tickers above the 80% band. Does that make sense?
Yes.
And then we have different algos. For example, call put vol. Now if I click on it, so here it is showing me that all the updated tickers with the call put vols on it. So now if I click on storyboard, no, for a storyboard I need to have algo. Now if I click on search, it's gonna give me all the algos with the call and put vol, basically all the tickers with the call and put vol. Does that make sense? I basically
Yes.
made a PDF showing all the codes that like giving you a kind of walkthrough with the codes that you can use with the algo fund, and I'm gonna send it to you in a bit. It is already there in the video. If you remember, we made a video on the algo fund. It is still there on our YouTube channel, and it explained that how you're supposed to use the algo fund and all that. Okay,
Awesome.
I'm just explaining the basics of it. Now if I click on storyboard, what it's gonna do, it's like it's gonna create this storyboard that these charts are gonna update every 3 or 2 seconds, like that. You can actually change
Okay.
the time, and if you wanna keep it on your second chart, you can actually do that. Second monitor, you can actually do that. You can just have it right there, so that you do not lose any setups, if that makes
Yeah.
sense. Next
Okay.
up we can talk about is basically I want to talk about the data. Okay, so how
Okay.
to derive the data? You remember we talk about the ceiling and the floor and all that stuff, right?
Yes.
So how to actually derive that? Now if I click on current here, load, I can you first of all you have to load contracts. Okay, I'm gonna load the July 11th contract, which is for tomorrow, right?
Yeah. And
Now I'm gonna
you're
calculate the data.
you're referring to the ceiling and floor we spoke of earlier this session. Like we didn't speak of the ceiling and the floor when we met on the 30th.
No, sorry, can you repeat that?
Yeah, you refer when you say like ceiling and floor. We didn't talk about that last session. This is like you
Yeah,
brought
I,
it up.
I didn't mention. Yeah, of course, we can talk about the decision. I'm mentioning it for the first time here.
Yeah, I just want to make sure.
Yeah, no, no, no. We did not talk about this one. Yeah, this is a difficult one to understand. Not difficult, but yeah, it is a bit different from all the other stuff out there,
Okay.
if that makes sense.
Yeah.
First of all, I'm going to tell you the basics. This is the ceiling. This is the floor. This is the PML. This red line right here, and this is the green price line.
Okay.
Okay, does that make sense?
Yeah.
So basically, this options data you see is about 3 to 4 minutes delayed. Okay,
Okay.
now it's 3 to 4 minutes delayed. Earlier it was like 13 to 15 minutes delayed. Uh, when we did not have those servers. Okay,
Yeah.
now I'm going to tell you that what does the ceiling mean and what does this floor mean. But I want you to look at the exposure levels. You see
Okay.
that these are all negative exposure because of the negative sign right here.
Yes.
So this shows that how much money are the market makers losing.
Okay.
So here, if I look at this price at 553.78, market makers are going to be losing 93,914,180 dollars.
Okay.
Does that make sense?
Yes.
So that is the negative exposure. Okay,
Got it.
negative exposure means the market makers are losing money. Basically, they're not losing money, but they are selling premium. Okay,
Okay.
so they're not losing, if that makes sense, right?
Selling premium. Okay.
Yeah, and then we have the positive exposure. You see the number positive exposure right here.
Yes.
18,330,120 dollars. So what is that? That is the positive exposure, and that
Okay.
is the ceiling.
That's the ceiling. Okay.
Yeah, that is where the market makers want to go.
They want so market makers want to have positive and negative exposure or only positive exposure.
Yeah, positive. Basically, some positive exposure means that the price gets above the ceiling. Okay.
Okay.
Yeah, but that is referred to as a positive exposure. Same as for the floor. Okay.
Okay.
Yeah, but basically it happens rarely that we see that these ceiling and floor are actually broken. Basically these are like a barrier, so the price cannot move beyond in most conditions. Okay.
Yeah.
And I'm going to show you an OMM how to visualize the ceiling and floor. It's pretty cool to actually look at it. Okay, then we have the price line right here. Okay, these are the puts below. So
Okay.
puts below, what does it mean? I'm going to talk about puts below, and I need you to remember what did I mention about the puts below, calls above, calls below. Okay,
Okay.
so puts below, you can see right here, puts below the green line, there are 291,336. Puts above the green line are 58,811. So these two right here are bullish confluences, and these two right here above the price line are bearish confluences. Okay,
Okay.
these are above, calls below, puts below. Does that make sense?
So above is bullish confluence and
No, no,
below
no,
is
no.
bear.
Below is bullish confluence. I'm gonna talk about it. Okay. For
Okay.
now, I want you to remember what I mentioned about the puts above and puts below. Okay.
Okay.
Then we have the peak money line. So the peak money line is the highest negative exposure. You see right here in the exposure graph that 94 million is the highest exposure, and this is the peak money line,
Okay.
right? So that is the highest negative exposure. Sometimes that is like a neutral line. So the
Okay.
market maker is kind of acts like a pivot. When the price is above the PML, it means the price is bullish, and the price is below the PML it means the price is bearish.
Okay.
Does that make sense?
Yes.
Okay, perfect. You don't need to look at the number right here for the peak money line. You do not have to. These are not related to the OMM and stuff, but this one is. The green line is. Okay.
The green price line. Okay.
Yeah, and then you see the dead zone. This one right here, the dead zone, this yellow area.
Yeah.
So this yellow area in the overnight kind of acts like a pivot for the session, for the
Okay.
next session.
Got
Does
it.
that make sense?
That makes sense.
You know, if you see like right here, 554.89 to 555.45, that is gonna act like a pivot
Got it.
for the next session, but only in the overnight data. Okay, when
Okay.
this dead zone forms in the intraday session, that means that that area actually shows that 0% of the contracts are winning. That is the area that is most beneficial to them.
So the market makers want to be in this market maker dead zone because
Yes,
they have
exactly.
very
That
low,
is the that dead zone is the most beneficial to them. They make the
and
most money there.
so they have the least amount of exposure then in the market maker dead zone.
Yeah,
Okay.
basically in the dead zone, the market sometimes consolidates. That is the most beneficial for them. For them, they don't want to move the markets. They're gonna make the most amount of money, and that is what the dead zone does. So basically, right here, the dead zone has formed. So you got a market. Right now, you can mark it on your chart and test it out that it works as a pivot or not.
Okay. And so when do you want to mark this? This is done. You said this is on the overnight session. So do you mark it in the morning?
No, you gotta mark it in the overnight session if you're looking for the pivot. What do I
Okay.
say? That if it forms intraday, that is like a magnet. Okay, that is like the most beneficial area for them.
Yeah. So those are good targets. If it's above the market maker dead zone, we can see a
Yeah, yeah,
retraction.
we can target it 100%. Right,
Okay.
and sometimes the market can consolidate because of the dead zone formation.
Okay.
Yeah, in the intraday session,
What do you mean by the intraday session?
like those 6.5 hours of trading,
Oh, yes, yes. Okay.
regular trading hours.
Got it.
Yeah. So yeah, this was the basics about the stuff we had, and I want you to watch the video that Biggin made on the options analyzer usage. Okay, explain it really well. Now I'm gonna be explaining to you about the OMM. Okay.
Okay.
Okay, so you see right here, that is your OMM chart. Okay, so that is the
Okay.
new interactive chart that we have,
Okay.
that Rogue Moose made. This is pretty useful. Okay, now I'm gonna
Okay.
use this for explanation. Now I'm gonna zoom in. into one of these sessions, like right here. I can zoom
Okay.
in into this session right here and zoom in into this OMM session right here. So the below you see this one right here, that is the OMM. Okay,
Got it.
and this one is the ceiling and the floor, right? Remember we
Yeah.
just talked about it. So
Yeah.
yeah, so that is the ceiling. This one
Okay.
right here, that is the ceiling. Remember what the ceiling is. That is the positive exposure value. That is the positive exposure value for the downside. Okay,
Okay.
this is the PML, the highest negative exposure value.
Yes, the PML is the highest negative exposure value. That's what the PML is.
Yeah, this is the green line. That is the price. When the price
Yeah.
is below the PML, the price is
When the price is below the PML, that puts below.
no, that is bearish. I didn't
Oh,
mention
that's
anything about the puts below.
oh, okay. So then when the price is below the PML, it's bearish. When the price is
Yeah, when
above the
the
PML,
price is above the PML, that is bullish.
okay.
Yeah,
Oh, is it because the PML? We said the PML acts like a pivot.
yeah, exactly. Remember, I just mentioned that
Yeah, yeah,
that it
yeah,
acts like a pivot.
yeah. So then below is bearish and above is bullish.
Yeah, so that is like the basics about the ceiling and the floor. So
Okay.
basically, the sometimes when you see that, what ceiling and floor does is that it gives you a range. It gives you a bracket where price can move. Okay, so in most conditions, it won't break it, and the PML is like a pivot. Okay, sometimes when the price is very much near to the ceiling, we either see consolidation there or a sharp reversal to the PML.
Okay.
Okay, when you see that there's a transition above the PML, you can actually target the ceiling, you know, because the
When
market
we see
makers want that.
consolidation, so when we see consolidation near PML, you want to target the ceiling.
Yeah, when the price crosses the PML, not consolidation. When the price is consolidating near the PML, that is the dangerous thing ever,
It's
because
dangerous.
that
Okay.
means that we're gonna see like consolidation for 30 to 45 minutes.
Okay. When
Yeah,
it's
if the
consolidated,
market starts consolidating in that area.
but if you see a clean cross, a clean break.
Yeah, when you see a clean break, that is like the most cream setup in my opinion, and you're gonna see that price. You can actually easily target the ceiling, but you gotta be careful when it updates, because you want it to update to the upside if you want to give market like more cushion to the upside. Does that make sense?
No. What do you mean you want to
Yeah.
wait for it to
So
update?
basically, see, this value is constantly changing, and the
Yes.
price reacts according to that. If the ceiling goes down, that means the price needs to go down. Okay, not needs, but it should go down,
Should go
right?
down. Yeah.
And when the ceiling is going up, that means that it is good. You can expect upside. That means
Okay.
that the market makers are creating cushion for the upside, that the market wants to go upside, so they are increasing the ceiling number.
That makes sense.
It's good for them. Does that make
Yes.
sense? Same is for the floor.
That makes sense. So
So
as
if
the
the
price,
ceiling is, for example, right here, I wish I could draw, but if the ceiling is going up, like right here, you can see the ceiling is going up. You
yeah,
can look at my cursor. You can also expect the price to go up like this.
that makes sense. Yeah.
Yeah, that makes sense. Let me.
And that happens because the market makers want to give more cushion.
Yeah, exactly. Perfect. You got it. Now I'm gonna zoom into the recent session. This was a pretty much a consolidation session. Now I want to show you the ceiling pin right here. Right?
Okay.
You can see what I mentioned, that sometimes the market consolidates around the ceiling, right?
Yeah.
And that is not really good for us, because then how can you actually trade? But that is the most beneficial for the market makers. But
Yeah.
right here you can see the ceiling move down, so the price also moved down. Does that make
Yeah.
sense?
That makes
And the
sense.
clean break. Remember the clean break you were talking about?
Yes.
So we saw the clean break here. Also, we did see the OMM going long, but let's just not talk about it right now. So we did see the upside move, like right here. You could have targeted the ceiling or somewhere area around it, or an open state from QQQ live. This would have been like an easy trade for about
Okay.
100% at least.
Yes.
Okay.
Because there's a break. Yes.
Yes, it gave us a clean break, if that makes sense.
And so, what type of setup would you want to take there? Would you want to take like in the money calls?
Yeah, I'm not in the money. I don't take in the money calls. I'll always take out of the money calls, like in the 0.30 to 0.50 range
Okay.
for better leverage. Okay. So now,
Yes.
of course, at the starting of this session, you can see that the price was near the floor. Even
Yeah.
though the floor moved downside and the ceiling moved up, We did not see downside. You know why? Because when you see the ceiling and the floor are moving in the opposite direction, means the overall bracket is expanding. That means that you can actually expect some sort of volatile move, that the volatility is going to increase here. So the market makers are increasing cushion for both of the sides.
Yes,
Does that make sense?
that makes sense.
Okay, you see the reversal here, 552.82, and remember our P553 put ball.
Yes,
See the
actually.
reversal?
Yeah.
It's reversal from here to, let's just say that
All
you
of yeah.
traded to the PML, that is $2 something. That could have been easily 100%.
Yeah, but why would you take a reversal all the way down there? Because the ceiling and the floor both expanded in opposite directions. We expected a volatile move, and the floor was so close that the volatile move would have to be toward the ceiling side.
It doesn't these both expanding does not tell you anything about the direction. It just tells you about the volatility.
Yeah.
When it settles down, that when it starts to again react in this way, then it tells you about the direction. When it's coming down, means that expect some sort of resistance.
Okay.
So they are decreasing the cushion for the upside.
Yeah, because I don't understand why you would take that trade over there because the green price line doesn't cross the PML all
Yes.
the way back
So
to the
yeah,
top.
of course, if you want to play the beginner way, yes, you gotta wait for the price breaking the PML and then take the calls.
Okay. Yes.
Yeah, your dad also mentions it that when the price crosses the above the PML, he sometimes takes call there, or sometimes he goes with the tabletop. Remember?
Yes, I do remember the tabletop.
Yeah, so he goes with the tabletops or the PML. If the price is above the PML or below the PML, he decides his trades according to that. Now we can talk about the OMM. So here I used a different session, okay? So this session I wanted to show you the OMM. So remember what I mentioned about the puts below, puts above, calls below?
Yeah,
So this lime green line, it's the puts above, okay?
the line green line is puts above. Okay.
Yeah, the lime green line is your puts above. And when the puts above are greater than the puts below, what is the puts below? This red line right here. That is the puts below. And remember when I showed that on the chart that the lower numbers, the puts below and the calls below, are bullish confluences, right? And the puts above and the calls above are the bearish confluences. Does that make
Yes.
sense?
Yes.
So here, the puts above, which means the bearish confluence is above the puts below. That means that this is the bearish divergence. That means the bias is bearish. To answer your question earlier, that why did you take that call there? It depends. For me, it depends on the divergence. Okay, so it tells me the overall bias. Does that make
So
sense?
yeah, so when the puts above is above the puts below,
Yeah, when the puts above
the
is
bearish.
greater than puts below, that means that it is a bearish divergence. And when the puts below are greater than puts above, that means that is a bullish divergence.
Bullish divergence. And what do you mean by divergence? Like,
Basically, it's like a pattern that when the red line gets above the green line, this lime green line, that means that is a bullish divergence.
okay,
Simple.
and again, it's the opposite. If the puts above, or if the puts below is above the puts, if the puts above is greater than the puts below,
If the
no.
puts
If the
above, I'm gonna repeat it. If the puts
yeah,
above is greater than the puts below, you can see it's written right here.
yeah,
Puts below the green line, puts or at or above the green line. Okay. So
okay,
when the puts above is greater than puts below, which means the lime green line is greater than the red line, that means that is a bearish divergence.
yes,
And when the puts below is greater than puts above, that means that is a bullish divergence.
got it.
When the red
Okay,
line is greater than the lime
lime
green.
green line. Yes.
For now, we're going to stop at it and look at the price action. You see, the overall
Okay.
price action was basically bearish.
Okay. Yeah.
Yeah, so that is the overall bias. That means it is bearish. Simple.
It's bearish. Okay.
And then we have the this pink line and the dark green line.
Okay.
The pink line is the calls below,
Okay.
and the lime green line is the calls above. Make
Okay.
sense?
Yeah.
Okay. So the calls above, These calls above are greater than the pink line. So the dark green line and the pink line are correlated to each other, okay? Because
Okay.
these are the call volumes, right?
Okay.
And these are the put volumes, right?
Got it.
For the pink line, you see, it is not greater than the dark green line, and you know why? Because of our bearish divergence. The overall
Okay.
bias is bearish, right?
Yeah.
So the dark green line is also greater than the pink line, and these two lines are very important to me because they show you the buying pressure and the selling pressure. If you see that the this dark green line right here is increasing, okay,
Yes.
that means that the selling pressure is increasing. Like right here, it increased. See the selling pressure right here.
Yeah.
The the puts above and the puts below are pretty much more stable compared to the calls above and calls below.
How
Okay,
can you tell that? Well, because the slope of the lime green line and the red line
you
are
gotta
this,
go
then
back on your charts and look at it. You gotta go back
okay.
on mem every single day and look at it. Then only you'll
Okay.
be able to understand it. Me
Yeah.
explaining to you, this is just like mathematics. Teacher can
Okay. Yeah.
explain you the concepts, but you gotta practice. Then only you'll be able to understand this topic,
Yeah. You're right.
right? I'm just telling you the basics of it. There are
Okay.
much more deeper strategies to it, like your ceiling collapse regime and all that stuff, and you gotta learn that if you
Yeah.
want
It's
to
all
use
home.
it. But not right now. For first of all, your target is to understand the basics and just use the basics. Okay.
Yes.
Even I personally do not use the regimes that much, but you have to understand the basics. Basics are everything. You build
Yes.
everything upon the basics. If your basics are strong, you're going to be able to understand every single thing. So right here, you can see that the dark green line actually increased, right? That led to the downside move increasing, right?
Okay.
Right? Does that make sense? The
Makes
overall bias is bearish. Why? Because price is below the PML. We are showing a strong bearish divergence. And this divergence right here, this is not a strong divergence. You know why?
over there is not a strong divergence because the lime green line is not it's not that big above the red line.
Exactly. You got it. See? Easy. So the lime green line is not making a good distance with the red line. That means that the market maker is still fighting whether they want to show a bullish bias or a bearish bias. And you can see the price was just reacting around the PML. It was no fun, right? It was all consolidation. But when it did break down, and we saw the move to the downside. Does that make sense?
Yes.
Right? So that is how we use the OMM data. So this was the basics of it. I explained to you what is the visual of the puts above and the puts below is. Okay.
Yes.
So yeah, basically we use the OMM for the bias, and the ceiling and the floor gives you a visual that if you're gonna expect volatility here or not, and where the price is situated, whether above the PML or below the PML, and whether if the price is above the PML, the ceiling is increasing or not for us to see more upside. Does that make sense?
Yes.
So here in this example, I wanted to show you about the calls below. You can see the the bullish divergence right here with the puts below greater than the puts above is more subtle. It does not react to the price that much. But here you can see that the calls below are actually more sensitive to the price action. It increased here, right? It showed a spike here. Does that make sense? And here we saw the upside move, right? So that is basically all about the OMM. I wanted to explain to you. These are the basics, and I want you to watch that video. Remember, I mentioned about that big mate. So it's going to give
Yes.
you extra clarity, and also I want you to look at the OMM every single day for SPY and QQQ for more clarity.
Okay.
Okay, so now we're going to talk about the spread monster tool, and basically we use the spread monster tool on the wave one daily the most because it works the best that way on the daily time frame. And I'm going to show you on different time frames too. And also I plotted a chart using the spread monster tools that I used to plot like somewhere around February and March. So I'm going to also show you that. Okay.
Okay.
So let's go into spread monster. And so basically it has four main tools in it, or features you could say. The first one's the volatility graph, then it is the density graph, then it is the odds graph, then we have the statistics right here. Okay, so first of all, we're going to be talking about the first graph right here. Okay,
Okay.
that is the volatility graph. So volatility graph gives you four main levels: the medians and the walls. Okay, so we
Okay.
have two medians right here, the long median and the short median, and then we have two walls, the wall long and the wall short. So what is the median? So basically, there is 50% chance that a median is hit in just one day. Okay, so let's say that you have a bullish bias and you're looking for a target, and yeah, you have median as a 50% target. Okay, 50% odds to reach it and to break it. Does that make sense?
Yeah, that either median is hit, there's a 50% chance.
Yeah, and also there is 90% chance that either of these medians is hit. Okay,
Okay.
like either of them, like it can either be this one or this one. Okay,
Okay.
but this rule is not valid for the balls, so I hope the median is like understood to you.
Okay.
Right, so next up we have the ball long and the ball short. For the ball long, let's say there's only 25% chance to break. Does that
Okay.
make sense?
Yeah.
Yeah, so here we had the 50%, that was the median, and then we have 25%, that is the wall long. So we have four main levels for our session. Okay, then
Okay.
we have the max outlier, that is 4.84% from the close, that is 581.02. We have 2.27% odds to see it, and same is for the downside. Next up, we have the apex. Now, apex is like the middle of the volatility graph chain, it acts like a pivot. Okay, so that is all it does, it acts like a pivot. Okay, but personally I do not use the apex. I like to use the dead zone as a pivot, as I mentioned earlier, if you remember from our previous call, that you use the overnight dead zone as a pivot. And also there's another tool inside of the spread monster that helps you decide a pivot, so I'm also going to show you that. Okay, so I
Awesome.
hope
Okay.
everything's clear till now about the volatility graph.
Yeah.
Okay, so that was the main things about the volatility graph. And next up, we have just one thing, that is the, you see this X right here?
Yes. Those
So
X's.
they basically represent the candle, like for the day. Okay,
Okay.
it is not telling you that both like the high and the low should be below and above the median. Okay, it's just trying to show a representation of the candle. Okay,
Okay.
and the candle is a bit different here. So the candle, it's for the candle. Basically, what do we consider? We consider the main price, right, the current price, and it just fluctuates according to that. But here what it does, it creates a candle using the high and the low, so it does not change as long as the high and the low does not change. Does that make sense?
That makes sense.
Okay, so this was all about the volatility graph. Next up, we have the density graph. So as the name suggests, the density graph, so what it does, so density graph gives you the density where price will stay the most. You see the dark color here?
Yeah.
So it's trying to show you that in the past 500 days, because I'm using 500 days aggregation, in the past 500 days, price has stayed in this zone right here the most. Because this is more dense, right? Because
Yeah.
as you move down and above, you see the density is becoming less. It's trying to show that it's less likely that price actually goes there. So as the name suggests, this is the density graph. Next up, we
Okay.
have the sinusoidal waves, these waves right here. You see these waves?
Yes.
So these are trying to show paths for price.
Okay.
Remember the projection of waves?
Yes.
So it's kind of similar to that. It's trying to show a path that price can cover. Okay, but
Okay.
how I use it is that I use these clusters that form here. Like you see this cluster here where a lot of
Yes.
waves are forming a curvature.
Yes.
So that is like a cluster, a strong support zone, because these curvatures are actually formed from the previous like 500 days of reversals, right? And we are
Okay.
using the historical data to actually give us the data for tomorrow. So you see these curvatures below the previous day close. For example, this is the Friday close, so we are seeing the data for Monday. Okay,
Okay. Yes.
yes, so all these curvatures here are the supports. Does that make sense?
Yes. And so this data would be used for Monday, not for using for Friday.
No,
Like
no, no,
the
this is the Friday close here.
yeah.
Okay, so of course we are looking at the next day
That's
for
it.
Friday, because all of these waves are starting from the Friday and closing to the end of the Monday session.
Okay.
Okay, so it's trying to show the paths, like the price can cover. And same is for above the previous day close. That is, we can look at the clusters, or you can also look at the last line of defense waves. Now what do I mean by that? You basically see like a singular wave here.
Okay.
So it acts like a breakout level,
Okay.
because we have clear area till this wave right here, so it's gonna act like a breakout level. Okay, and all these, you see these clusters forming, these little clusters, so these can be used as resistance zones that I will use in my chart. I'm just gonna show you in a bit. Okay,
Got it.
so does that make sense, everything about the density graph?
So far, yeah.
Okay, so next up we have these X right here. So what do they actually do? So in the past 500 days, it's trying to show the open and the close data. You see this X right here. So basically,
Yeah.
it's trying to show that at this price, the session opened up for Monday. Okay,
Okay.
but we do not know the particular day. But it's trying to show X, basically to form a zone where the market can open. Because you see here, it's like a lot of density of X right here, correct?
Yeah.
So it's
Yeah.
trying to show that it's quite possible that the market opens in this zone right here. And same is for the close. Simple concept. Next up, we're gonna go to the odds graph. So odds graph is basically made up of, on a concept called the Galton board. Have you ever heard of it?
I've not heard of it.
Okay, I'm gonna show you right now how a Galton board looks like. Okay, so we're gonna use this animation right here, where I'm gonna show you that how it actually works. Okay, you see
Okay.
these balls, right?
Yeah.
So basically consider them as price.
Okay.
So where do you think they're gonna fall first?
They're gonna fall to the middle first.
Exactly. They're gonna, if you go to the end, they're gonna fall in the middle. Now if you
Yes.
look at the odds graph again, you see that if I tilt this graph 90 degrees to the left hand side, it forms a similar Galton board, right?
Yeah. It looks like a normal distribution.
Yes, so it's forming that distribution right here. Basically, if I copy this image, just give me a second. So if I tilt this image, if I rotate it basically to the left hand side by 90 degrees, see how like similar it is to
Yeah.
the Galton board distribution we were looking at, right? So
Very
basically,
similar.
the price starts falling from here, and the maximum it could go is like till here. So that is what
Okay.
it's trying to show. And the normal range is the most probable range where it's gonna stay. Okay, you remember
Okay.
that curve we were looking at, right?
Yeah. As
So
a
the
support.
normal
Yeah.
range is that curve.
The normal range is that like the high
The
density
normal
formation.
price range. You see that normal price
Yeah.
range? You see these boundaries? So that is the
Yeah.
normal price range. Okay. I'm
Okay.
gonna move back to the fractal chart. Yeah. So we have the normal price range right here. Okay. So it's trying to show that the most of the session we should stay right here.
Got it.
And remember what I mentioned about the pivot, right? That you can also derive a pivot using the spread monster.
Okay. Yeah. I do.
So you see the intersection of these two frequencies right here, the
Yes.
green one and the red one, where they intersect, that acts like a pivot.
Okay.
Does that make
The,
sense?
the intersection. I thought the apex was to act like a pivot.
Like the apex is a pivot, but I don't like to use it. This is like a much more reliable option for a pivot.
The intersection of the green and red lines.
Yeah, these two frequencies. Basically, what are these frequencies? You can use them as resistance and support level. Where you see these frequencies are going flat, like right here, it went flat,
Okay.
right? You see it, right?
Yes.
So it marks as a resistance. Okay,
Got it.
simple
Yeah.
concept. Where it goes flat,
What?
go for it.
Sorry. Yeah. What is the green and red lines exactly?
But basically, these are price frequencies, and basically, to be honest, I don't know the math behind it, but I know the usage that basically wherever they go flat, that marks as support and resistance levels.
Okay.
Yeah, and these are, of course, this is formed from historical data. So all of this is from the past 500 days. Now, same is for the red frequency. Wherever it is going flat, that is support. Next up, you see these odds right here. Basically, why it's named the odds graph, because of this right here, these two odds. Okay, and we have two data sets. The data sets for the short side and for the long side. Okay, so we
Okay.
are given the odds for the the break of certain levels, like this level right here, 59.92. To break that, we have 10% chance, right?
Okay.
See it? Now to break 538.59, we have 2.88% chance.
Okay.
That's
Yeah.
what it's trying to show. Basically, it's trying to show odds again for the break of price, and what it sustains or not. And where you see these like frequencies are intersecting, these two data sets are like intersecting,
Yeah.
so that is the normal price range.
Okay. Because does that also line up with the medians that we were talking about earlier, where it
No,
has a
these
56?
this normal range does not like collide with the median, so these two levels
Oh,
are not the same.
okay.
Yeah, so that is, these three graphs are different. Okay,
Okay.
so these are made from different principles, you could say.
Okay.
Does that make sense?
Yeah.
So we are done with the explanation of these three main graphs. Now we can talk about the statistics. Okay. Now this
Okay.
is also a really important tool. Okay. So as the name suggests, I said statistics basically. So you get the odds. Okay. For example, this first one right here. So the bull count high below the wall long 562.51. So 43 out of 53, that is 81.13% chance. So does that make sense as I read it?
No, actually, a bullish
Okay.
count.
Yeah. So bull count basically is trying to show that is a bullish count. This is the count right here. You see count.
Yeah.
So it's trying to show you the bullish count. Means 43 bullish counts. Okay.
Yeah.
Then high below the wall long means the high of the day, means the high of the Monday forms below the wall long, that is 562.51. Here
Okay.
562.51, that is the wall long, right?
Okay.
What's the probability of that? 81.13. Does that
Oh,
make
okay.
sense now?
Yeah, that makes sense then.
Okay. And you see the total counts right here, like 53, 106, 106, all of these right here. So these are the
Yeah.
total counts,
Okay.
right? So you could consider this as a universal set, and this is like a subset in it. Does that make sense?
Yes.
Okay. So for the total count should be above 70. Okay, this total count right here, you see 100, 106, 53, this 106 zone should be above 70. Does that make
Okay.
sense? And how it should be above 70, basically if you're using, here I'm using the HL match. Okay,
Okay.
right, for my setting of the spread monster, I'm using the HL matching. So basically what it does is that, for example, the current market is at H3. So it's gonna take all the H3 in the past 200 days. For example, if I'm using 200 DTL, that's gonna take all of the H3s inside of the past 200 days and give you spread monster data according to that. But sometimes, because on wave one daily, where you see very quick transitions above and below the pivot, S3 is not that frequent, right? Because we
Yes.
see transitions happening every single day almost, right? So because of
Yes.
that, you have to increase the amount of data. That is why I'm using the 500 DTL, because it gave me a count above 70.
Got it. Okay. And so your count has to be above 70.
Correct. Yeah. That is like a thumb rule. Otherwise, you're not going to get the perfect data you're looking for. Okay.
Okay.
It's going to be skewed, you could say. Right? So
Yes.
moving back to the HL matching and the weekday matching, we'll talk about that in the last. It's not a big deal. And then we also got to talk about the weekly spread monster. Okay. So first, the
Okay.
statistics, the basics, first of all. Okay. Next up, we have the bull count, high at or above the max average. This is the max average, 1.50.
Okay.
High 62.51, same price. 10 out of 53, that is 18.87%. Basically, high forming above. This was the below. Okay,
Yeah.
below 562.51. If you subtract that, basically subtract 100 minus 81.13, you're gonna get this 18.87%. Now here you see the beer counts. So basically beer counts means a bearish counts. It's
Okay.
simple as same as the bullish counts. But here beer count low at or below the max average 554.90. 8 out of 53. 15% chance to see that.
Yes.
Does that make sense as I say it?
Yes.
Okay. So basically it's telling you that what's the probability that the low of the day is below 544.90.
Yes.
It's giving you the odds of that, right?
Okay.
Okay.
Yeah.
So next up we have the odds of, this is like the options analyzer. If you remember, you can get the probability that, what's the probability of seeing H3, H5 and all that. So it's the same here. Odds of 3L on Monday, July 14th, it's giving you the odds for that. What's the odds for 1H? It's giving you the odds for that. Basically, looking at this, these odds right here, we are at L2, I guess. Yeah. So basically we are sitting at L2 here. Okay. So we are
Okay.
getting the data that, what can happen for the next day, right? On Monday, it's trying to tell you that, we can form the H1. Okay. Why? Because we have the higher probability of that, right? Next up, we have the odds for closure. What are the odds of Monday close above 544.20? 67 out of 100, 67%. Simple.
Yeah, but where is 554 marked in the chart? I don't see it as like an important line.
What is the close here? What is the last price?
Oh, here's on the left. Okay, last price was 554.
Yeah,
Got it. So
basically the
that's
close price
got it.
for
Okay.
Friday. Yeah. Next up, we have the long theoretical price at or above. Basically, now this here, long theoretical price, this is giving the odds to break that price. Remember
Okay.
the filters basically we had, right? The
Yeah.
10% filter, the 20% filter. So it's giving, that was giving you the odds that we have 10% chance to reverse from here. So it's giving you here that there's like 10% chance to break above it. So it's a bit different here. Okay.
Okay.
But both are working on the same principle. Long theoretical price at or above 558.85, 26.90%, right?
Gotcha.
Does that make
Yes.
sense? Simple
That
concept,
makes
I think so. Now, here, same is for the short side, basically the bearish side. Short theoretical price at or below 552.61, 30.77%. As I mentioned on the first day, we had our call that fractals is made up of two things: levels and odds. Okay, that is
okay.
all it gives you, and it's up to you that how you want to use it. And this is my basically my favorite tool to use, the spread monster. I like to use it like every single day. Okay, next up, that what we should talk about, like the weekly spread monster. So for the weekly spread monster, you got a forward looking aggregations. Basically, we're on the daily time frame, so it's asking you that, how many days forward do you want to look at. So we have 5 days in like a week, trading 5 trading days in a week, right?
Okay.
So I'm gonna click on 5. So from Friday here, so it's gonna tell me the data till the next Friday. And here, same, it's gonna be using the 500 DTL because I did not change that. Now here you have the data for the week. Okay. Now for the
Okay.
density and sorry, for the volatility and the odds graph, the graphs are gonna look quite the same. Okay, as the chart we saw for the like the 1 day forward looking aggregation. Okay,
Okay.
but as I move on to the density chart, it's gonna be a bit different. You see
Oh,
here,
okay.
the chart
Yeah.
became a bit different here.
It's a lot more variable.
Yeah, and because we have a lot more days here, so it's gonna show you paths like that are much more defined. Okay, like right
Okay.
here, all of these waves are again showing the paths. Now it's up to
Okay.
you that how you want to use it. You want to use them as support and resistance levels, or you want to use them as just paths. Like you have a bullish bias, and the price is following this wave right here. Look at my cursor, right, and
Yeah.
it's somewhere around here for like Tuesday, right? For the
Okay.
Wednesday, you could expect that, okay, if the price is following this wave right here, if my analysis is correct, we should get above the Friday's close, 554.20. So these waves are, same concept as the daily ones, because as I mentioned before, that you gotta understand the basics. Everything else is gonna fall into place by itself. Okay.
Okay.
Again, we have the last line of defense, a breakout level, right? And also we have
Yeah.
the clusters here, like the cluster right here, cluster forming right here, where we
Okay.
have a lot of curvatures. Again, that is the cluster. Same is for above the previous day close price, and below the previous
Okay.
day close price, right? And
Yes.
then again, we have the open and the close for the week, right? It's telling
Okay.
you, it's giving you a range where it's most possible for the week to open up at, basically the open for Monday, and where
Yeah.
the Friday can close for the next
Okay.
week. So that was all about the weekly sperm monster 2. Next up we have the IB. For the IB, begin is like the guy for IV, and he already made a great video on IV. So I want you to
Okay.
check out that. Okay,
Yeah. Got it.
perfect. Next up, we can talk about is the weekday matching. So what is the weekday matching? So what this time it's not gonna consider the DHL matching. Okay, basically the highs and the lows. Basically, this is the Friday close, right? Now, what comes after Friday for trading? Monday, right?
Fine. Yes.
So what it's gonna do, it's gonna take all the Mondays in the past 500 days and give you data according to that. So this is like the weekday matching. But here, because I was using the weekday matching and I have too much DTL because I'm using 500 DTL, I should go down to 200 DTL to get better data on it.
Okay.
And I'm going to tell you why. Okay, so as I click on the weekday matching, the charts are going to be same. Okay, so basically you're changing that how they're derived basically. So next up, basically the density graph and the odds graph going to be same. The we have two settings for the spread monster, but the one that works the best is the HL matching.
Okay.
If you take care of the count, okay, the count should be the total count, like here the total count is 78, the total count
Yes.
should be about 70. So next up, I'm going to be showing you my graph that I plotted. Okay, it's going to make
Awesome.
a lot more sense that way. So here I have my chart. Okay, so wherever you see these red boxes, that is the resistance. Now how did
Okay.
this resistance form? I use the clusters,
Okay.
right? And same is for below the pivot. Now what is my pivot here? I use the dead zone as my pivot. I showed you in our previous session that how you derive the dead zone. Basically you look at the overnight right? Remember we looked at the yellow zone.
Yes, I remember.
Yeah, okay, perfect. So that is exactly what I plotted right here, and I told you that just plot it on your graph, and it's gonna make sense to you. And I did that right here. Okay, and wherever you see these blue boxes, that is the support. Again, the clusters
Okay.
that were below. Now here I use the sinusoidal wave graph. Okay, that is what I'm using to plot out these resistances and support.
Okay.
Okay, those clusters we saw, that is what I'm plotting right here. And you look at these, like I've written 31% odds to break. Now what where did I derive this data from? Remember we were looking at the statistics.
Yes.
So basically I looked at, okay, so 550.02, so what's the nearest price that is present in my statistics graph that that can give me the odds to break it? So it was 18%. So I just
Okay.
used those statistics.
How wide is your range for your
It
boxes?
depends from day to day, to be honest. Okay,
Okay.
so usually it varies from $10 to $10, basically above and below the previous day close. And you must be wondering that there are multiple medians here. So why is that? You know what I did? I derived this data from the wave 1 daily, the wave 3 daily, and the wave 7 daily. So what I did is that I took care of the count. I was using the HL matching because it works the best. What I did is that I took care of the count that it should be above 70. As it turned above 70 at whatever DTL I was using, I remember for wave 7 daily, no, sorry, wave 3 daily, I used the 6000 DTL to get me 106 something count, total count. So that
Okay.
gave me the perfect data for that graph. And that is why I plotted these walls and also these supports that were also from the, remember those LLODs I was talking about?
Yeah, the LLDs now. What's
Yeah,
the
last line
LLD?
of defenses, I was showing you a singular sinusoidal wave and then a breakout level.
Yes, I remember that. That's
Yeah,
called
so exactly.
LLDs.
So I just plotted those here. Okay,
Okay.
singular, sinusoidal waves as
Yeah,
simple
yeah,
as that.
because those are potential breakout limits because there's
Yeah,
no
yeah,
cluster. It's one.
exactly. So same as for the resistance, and also I plotted these medians for a second reason that remember those 90% odds to touch either of those medians.
Yes.
So there's 90% chance that either these three medians are hit. I mean, not like a complete 90%. It could be varying from time frame to time frame I'm using. Now you could just look at it and say that there's 90% chance to close these three medians. So these become
Got
targets.
it. Okay.
Now it's up to you that how you want to use these graphs. Basically, I mean, you look at it, you'll find more patterns, more than me, and you can also make your own chart. So basically, how I used it, that I looked for the break of the pivot and try to play the short side or the upside. These are the charts I plotted for Monday. So basically, I did that to give you a better visualization that how it would look like if you plot them on your graph. So where I've written cluster is like a strong support level. Okay, so these are also
Okay.
clusters, but these were like super strong. So this was all about the spread monster. The next stuff we should be talking about is the splicing graph. Okay, so what does the splicing do is that, for example, what do I mean by splicing? So splicing, it does that. For example, you are at Monday. Okay, you have the Monday session and Monday session has closed. Now you're wondering for the bias for Tuesday. So splicing gives you a fractal chart using all the Tuesdays in the past 200 days or whatever amount of data you look at. Now I'm going to show
Okay.
you this graph right here. So this is the Monday splicing. Now what it is that it takes all the Mondays in the past 200 days and gives you a chart for that. So this is the splicing chart, and how to basically get that on your chart. If I click on add here, right click on add and type down, for example, QQQ, and go into splicing. Okay, I can
Yes.
add also like combos, for example, Monday, Tuesday, Wednesday, these 3 days, and add them for my splicing chart, or just Monday, Tuesday and add them, or even just Tuesday. Let's say I want to add, I can add it like that.
Yes.
So I'll get them right here on my chart. Okay, so right here, that's the Monday, Tuesday. This is like 2 days consecutive. Okay,
Okay.
Monday and Tuesday. So these, this is like Monday, Tuesday. Tomorrow we're gonna see a new session that is gonna be Monday, right? Then again, the
Okay.
two consecutive candles we're most probably gonna see, like these two consecutive candles, these two consecutive candles. So basically, what they're trying to show is like the Monday, Tuesday. So this works the same as the fractal chart, but it's like more confined data you're looking at, more specific data. So the concept for the pivot, the vector, and the waves remains the same. So this was basically all about splicing. Splicing is a pretty basic tool that you can use, but you gotta mess around on your own to find
Okay.
different patterns and what you want to look at. For example, I use the 2 day combo and the a singular day. For example, I use the Monday and then I use the Monday, Tuesday, and then I move on to the next day. So next up, the last tool we're gonna be talking about, that is the periscope. Okay, now I'm
Okay.
gonna be very quick with the periscope. It's not a big deal with the periscope. We also have a town hall recording we have on the periscope, and you can also check that out in our YouTube channel. Okay,
Okay.
so here, if I right click, we have the periscope open right here. So what does the periscope do? It gives you all these signals, okay, like all the possible traits that you do not see from a regular eye. Okay, I mean, you
Okay.
can of course find different setups, but it's gonna be it's gonna be running a lot of mathematics and a lot of wave analysis behind you, so that you don't miss any setups. Okay,
Got it.
it's gonna be giving you signals. Now I'm gonna show you like how it's giving you signals. For example, for ABBV, I'm using the bullish data. So what is the
Okay.
bullish data? So when the price is greater than the peak money line. Remember, we learned
Yes.
about the data, the peak money line,
Yes.
the ceiling and the floor.
Yes.
So here for the bullish data, we have the price greater than the peak money line, that is going to give you the bullish setting, okay, for the
Okay.
periscope. Same with for the bearish, that the price is less than PML, okay,
Okay.
and the mixed is gonna give you the signal for both the bullish and the bearish, if that makes sense.
Yes.
Okay, and then is the reversion, that if you're already looking for a reversion trade and you're expecting that there's some kind of like a news event, that something about the tariffs that can bring a reversal, so you gotta use the reversion setting inside of this periscope.
Okay.
So just to show you like the signal, I'm going to be using it on ABBV. So basically, here we have the signal that when it formed. So the signal right here formed on July of 12 on Saturday. Basically, this is a very recent signal.
Okay.
And right here, it shows you the contract expiry, July 18th. And then the
Okay.
strike, basically these are all going to be calls. You know why? Because we are using the bullish setting. Remember?
Yes.
Okay, so then it gives you the buy to open, basically at what price you want to open the contract at, basically where the trade starts at, according to the periscope, where you should buy, and then the sell to close, and then the target gain. Here it's 62%, but sometimes we see like outlier gains like 2000%, 3000%, or sometimes like 16,000% that are pretty much possible. So these are the target gains that are like possible, basically targets according to the periscope. Okay, and here is the actual high. Basically, we haven't started with the next week's session, right? It's still
Yes.
Sunday, so the actual high is gonna form that, when we are in the session, it's gonna update time to time. Also the actual percent, right?
O-
How much percent gain or loss are we at, if that
Okay.
makes sense. And also
That
it
makes.
gives you ceiling, floor, PML, and the green line right here.
So how early can you use this setting?
So the suggested time to use it is after Tuesday.
Okay.
So it gives you the best signals after Tuesday. And it's suggested that you should not use the signals that form on Saturday and Sunday. Okay,
Okay.
and the signals you should start observing is on Monday. Basically, you start looking at them, and for example, if you see a signal for your preferred ticker, you should do your own analysis and see that if that direction is correct, and does that target on that contract make sense. Okay,
Got it.
now if I go into the bearish setting, you're gonna see that all of these are put contracts now, and we are seeing some of the outlier target percent gain that are possible. Okay, that is a
Okay.
possibility, if that makes sense.
Yeah.
Okay, now I'm gonna move back to the bullish, but I'm gonna show you one thing, that is the periscope watch window. Okay, so here we have the periscope watch window. Now here you can look at the updated signals, okay,
Okay.
for all the tickers.
Okay.
This is what I'm talking about. You see, this is the recent signal that formed for the periscope, okay, for the
Yeah.
bullish setting. It does not consider the tickers, it considers like all the tickers that you give to it and gives you signals according to that.
The most recent ones.
Yeah,
Okay.
you can look at the time and the date this signal is given. You can see it right here. All of these are on Saturday. All of
Yeah.
these signals were formed by the periscope in just one day. And you can also use them for different settings. That is like completely up to you. For example, if I want to look at different setting, I can look at the apply filter to metrics, right? Now
Yeah.
here, I'm gonna move it to like green line less than PML. For example, the bearish setting, I'm gonna click on OK. It's gonna give me the bearish setting. All of the
Yeah.
contracts are put now. Okay, so this was
So,
all about the periscope. And Begin streams the periscope every single day in the public we see. You can check that out too, and he also shares sometimes the statistics for this periscope watch window for each setting. So this was all the basics of the fractal system. I hope that everything made sense to you. So did it make sense?
yeah.
Okay, so I have a little homework for you and also the viewers, that if you have fractals, all of the stuff I mentioned, please look at it yourself, because it's gonna make a lot more sense that way. Me just explaining it to you and you not looking at in your fractal system is, just like waste of effort for me, but you
Yeah.
have to open your system and take a look at this stuff. Okay, that
Okay.
way it's gonna be much more helpful to you, because you're gonna make your own logic of different things that happen inside of the system. Okay, you're gonna make
Okay.
your own understanding, like, and it takes time. I understand that it's a learning curve, that it's gonna take like minimum of 2 months to actually like properly understand this system and start using it. Maybe less, it's up to you. It depends
Okay.
person to person. Okay, but I'm sure that I explained the basics well to you, and you got any questions, you can always